Good morning and welcome to the second annual conference with licensed financial institutions. I am the chair for this morning's conference, Shernell Thompson. The conference is being streamed live via Facebook and YouTube to you, our partners and citizens of the Eastern Caribbean Currency Union and internationally. We also extend a special welcome to those of you joining us from our policy departments in the ECCU, regional institutions such as the OECS, our fellow CARICOM central banks, and international institutions such as the IMF and the World Bank. This conference is a staple of the Eastern Caribbean Central Bank and brings together industry, including representatives from regional commercial banks and credit unions, as well as the regulatory authority to discuss issues related to the financial system, its overall stability, as well as a path forward in its development. We have an interesting program for you this morning, but before we get into the program, allow me to welcome the Governor of the Eastern Caribbean Central Bank, Timothy N.J. Antwine, to give his opening remarks.
Thank you, Mr. Master of Ceremonies. Mr. Trevor Brathwaite, Deputy Governor, ECCB. Ms. Tracy Polius, Chief Director, Policy. Mr. Michael Spencer, President of the ECCU Bankers Association and other executive members, chairpersons, CEOs, and senior management of our licensed financial institutions, development partners, panelists, other ECCB colleagues, citizens and residents of the ECCU, members of the media, good morning. I convey on this wet and overcast day in our region, I convey warm and fraternal greetings to each of you on the occasion of the second annual conference of our licensed financial institutions. Needless to say, we are in a virtual format as this is now standard operating procedure in this pandemic. We convene at a time of unprecedented challenge for our region and our world. The past 9 months have not been easy. I wish then to offer high commendation to all licensed financial institutions for your diligent work and responsiveness throughout this period. You and your staff have worked hard to serve your clients, many of whom are quite anxious about their livelihoods and their future at this time. The collaboration between the ECCU Bankers Association and the ECCB on the loan deferral program, which we jointly announced in March and extended and announced that in September, bear testimony to our collaboration and partnership. This arrangement has benefited over 26,000 loans, totaling $5.2 billion, almost 40% of our loan portfolio. As I have often said, we, ECCB and LFIs, licensed financial institutions, are partners in development. This partnership must endure in all seasons, good times and bad. I now turn briefly to the current economic situation. The International Monetary Fund, in its most recent World Economic Outlook, projects that the global economy will contract by 4.4% this year before rebounding by 5.2% next year. The fund's key message is that we should expect a long and difficult ascent with significant downside risks. One such risk is the resurgence of COVID-19 cases. Indeed, as we speak, a second wave is underway in the USA and Europe, our main trading partners. This second wave, which led to the UK's second lockdown, is having a very chilling effect on our region's attempt to jumpstart tourism. Moreover, the recent spike in cases in some of our member countries has resulted in a burst in the CARICOM bubble even as it was being assembled. These recent developments have direct implications for the pace of our region's economic recovery and the health of our financial system. For the ECCU, we now project a contraction of 16.2% this year, the highest contraction on record, before a rebound of 5.1% next year. Tourism, our dominant export, is unlikely to make a full recovery before 2023. That said, we are all heartened earlier this week, we were all heartened by news from Pfizer of a promising vaccine. The availability of an effective vaccine by the start of the 2021 tourist season would greatly improve our economic prospects and the trajectory of recovery. In this regard, I am aware that CARICOM is already engaged at the level of heads in international partnerships to ensure that our region has early access to an effective vaccine. Today, I wish to confirm that our EC dollar remains strongly backed by foreign reserves. As of November 6 last Friday, the back-end ratio was 97.2%. And as I have averred on previous occasions, our high buffers at the outset of this pandemic, a veritable insurance policy for shocks, will serve us well during this pandemic. Now I'd like to speak briefly to our regional response. Faced with this unprecedented challenge, the ECCB crafted a 3-year program of action for recovery, resilience, and transformation. This program is intended to complement national recovery plans, many of which have been or are being prepared. And I do want to thank all of you who have contributed to the development of these national recovery plans. 3 weeks ago, the Monetary Council approved this program of action. This program has 4 pillars: financial stability, fiscal and debt sustainability, resilient and inclusive growth, and payments modernization and digital transformation. Under the financial stability pillar, our planned actions include enactment of bankruptcy and insolvency legislation starting in St. Lucia later this month, establishment of a secured transactions collateral registry to support small businesses, the establishment of an optimal regulatory framework for the ECCU, and we will discuss this issue tomorrow. The initiatives under this pillar will build on a set of unfinished matters on which we have been working in recent years, including amendments to the 2015 Banking Act. We were pleased to launch the Eastern Caribbean Partial Credit Guarantee Corporation, or program, in early October. 6 countries have now passed the credit reporting bill, which St. Lucia expected to enact later this month, thereby paving the way for us to establish the Credit Bureau and, just prior to that, launch a very intensive public education campaign. And we hope to do both of that next year. We have asked our governments for a big push to treat with all outstanding legislation and to treat them really as an emergency and enact them with similar alacrity as the states of emergency and COVID-19 regulations that have been issued in this pandemic. I therefore make a request of LFIs to support these efforts with advocacy to our member governments and public education. From the outset of this pandemic, we have asserted the necessity for a growth mindset to seize these opportunities as they are presented. The late Peter Drucker, management guru, once said, and I quote, "The greatest danger in times of turbulence is not the turbulence, it is to act with yesterday's logic." Let me repeat that. The greatest danger in times of turbulence is not the turbulence. It is to act with yesterday's logic. End of quote. Based on that sagacious insight, I invite you to consider the following questions. Is your institution now equipped to switch to teleworking mode at short notice? If not, you have work to do. What if there's another lockdown? As part of operational resilience, every LFI must quickly build its teleworking capability. After all, the payment system is a public utility. Consequently, shutdowns ought to be minimized. And I mean shutdowns of the payment systems if and when there are lockdowns or there are restrictions on movement. Another question, where are you with your digitization program? And by the way, Does that include loan files? Could you imagine how helpful this would be for the ECCB to undertake its time-bound on-site inspections in this period as mandated in the current Banking Act? Moreover, it would also mean shorter and less disruptive on-site inspections for you and your staff. Another question, on a scale of 1 to 10, where does your cybersecurity and resilience rank? And is that ranking the finding of an independent assessor? So don't tell me your IT people say you're 8 out of 10. I want to know what an expert, external, independent assessor has to say on this matter. And by the way, I'm not asking you to do what the ECCB has not itself done. We have subjected our systems to external, independent assessments. And I would suggest that you consider the same. Licensees, we have much to do in this period and not a moment to waste. So let me conclude. In conclusion, I wish to thank my colleagues who put together this year's virtual event. This effort has been led by our research department, including Chanel Thompson, our chairman, Zana Bernard, Alistair Hodge, and other colleagues. They have also had support from other departments, such as our management information systems, corporate relations, and support services, among others. I close now with my oft-repeated phrase. As a region, we cannot change our history. We cannot change our geography, but we can certainly change our development trajectory through digitization and collective action. Let us meet this moment by setting and pursuing ambitious targets that would help all of our LFIs and our currency union to emerge stronger and more resilient in this post-pandemic world. And of course, to do so for the benefit of the people of our region. I look forward to our sessions today and tomorrow. And by the way, let's have some fun. God bless you all.
Thank you, Governor Antoine, for your opening remarks and for providing us with an overview of the state of the ECCU, our regulatory response as a central bank, and advice for our firms, including our licensed financial institutions in the region. Before we begin our first panel, please allow us to share a brief promo with you on our digital cash initiative. And welcome back to our conference this morning. Our first panel is a C-suite panel entitled The COVID-19 Pandemic, What is Ahead for the ECCU's Financial System? This panel will be moderated by Christopher Luard, Director of the Bank Supervision at the Eastern Caribbean Central Bank. Director Luard assumed the position in September 2016. In this position, he manages the regulation and supervision of financial institutions licensed by the ECCB. He also advises the governor of the ECCB on issues of financial stability and provides technical support to other stakeholders within the financial system. Prior to joining the ECCB, Christopher spent 2 years as the Chief Risk Officer at the Eastern Caribbean Financial Holdings Company in St. Lucia. While at ECFH, he was responsible for the strategic oversight of Risk Management and Compliance and the group's Business Continuity Program. From 2006 to 2014, Christopher held various positions at the ECCB, including an economic statistician, a senior bank examiner, and deputy director. Mr. Luard received his BSc in Honors in Actuarial Science and Statistics from the University of Western Ontario in Canada. He also has a diploma in Operations Research from the Canadian Operational Research Society. He is certainly well qualified and certainly more than well qualified to lead this panel this morning. Let us welcome Mr. Christopher Luard.
Good morning. Thank you, Shernell, for that welcome this morning. So, as Shernell mentioned, our first panel this morning, we'll be talking to our C-suite executives on the topic, the COVID-19 pandemic, what is ahead for the Eastern Caribbean Currency Union financial system. And this morning, we have three panelists with us. We have Michelle Palmer-Cazier, who is the Managing Director of Republic Bank Eastern Caribbean. We have Mr. Phoenix Belfield, who is the General Manager of the Dominica Cooperative Societies League Limited. We have Ms. Donna Wellington, Managing Director of Barbados and Eastern Caribbean at the CIBC First Caribbean International Bank. This morning, we'll invite each member of our panel to do a brief discussion, about 10 minutes, thereabout, and then we will open the floor in terms of our question and answers. We want for our session this morning to be very fluid and flexible in terms of the comments and the questions that we have. Shernell would have provided you at the start in terms of our housekeeping and the way that you can ask questions in our Q&A section of our Zoom webinar. Before we get into our panelists this morning, and the order this morning would be Michelle, Phoenix, and then Donna. So I'll give you a bit of the bio of each member of our panel. So for Michelle, who is, as I mentioned, was appointed the Managing Director of Republic Bank EC Limited in 2019. She's a senior member of the Republic Group for more than 3 decades, has significant banking experience. She's a marketing executive with considerable expertise in credit card business, specializing in research, development, and financial product management, and has a wealth of experience in the product development, operational management, and strategic management. So that's a brief bio of Michelle. In terms of Phoenix, Phoenix is the general manager of the apex body for credit unions in the island of Dominica, the Dominica Cooperative Societies League Limited. In Dominica, credit unions enjoy a 95% market penetration rate and sits as a jurisdiction with the highest credit union membership penetration in the world. Mr. Phoenix Belfield is an economist with training in strategic management. Welcome, Phoenix. And third, Donna Wellington is the Managing Director of Barbados and Eastern Caribbean at CIBC First Caribbean International Bank. Donna Wellington joined CIBC FCIB in 2005 after working 15 years in the financial services sector in Sagicor, EY Caribbean, PwC in Barbados. In June 2013, she was appointed to her current role as Managing Director. Donna is a seasoned corporate banker with 32 years' experience in the financial services sector. Since October 2016, she has been the president of the Barbados Bankers Association. So welcome to each of you. As I mentioned, we will start this morning with Michelle. So I invite Michelle to give her brief remarks in terms of our topic for discussion this morning. Michelle.
Question models and approaches which have held for as long as we can remember. Did we ever think that we would see that level of working from home? Let's talk about level of debt ratios. It's moving daily. What really is the true number? Even our fast-paced lifestyle, which we know have impacted family time. Can COVID-19 provide the opportunity to accelerate financial integration across the ECCU? I say yes. Grab it like a sure lottery number and run with it. I am pleased to share my thoughts on how we can control what's ahead for the ECCU's financial system. I will focus on the role, or the new role I would say, of three main players. Our region's future, stability or growth. Do our governments continue to use borrowing as the main element towards stability, or do we focus on growth? The data is not pretty. We heard from the governor this morning, not at all pretty. We know our debt to GDP ratio is very high in the Eastern Caribbean, high unemployment rates, shy investors, both local and foreign. This paints a picture of many fiscally weak economies, highly dependent on tourism. And while our governments are doing a fine job to allow us to safely welcome tourists who still want to come to our beautiful region, stabilizing the region's economy will require more of the same, government borrowing towards supporting the vulnerabilities of our economies. Is that the way forward? I say no. The medicine must be to pivot to growth spending to stimulate our economies. Lay the framework to encourage development of new and different industries to create jobs in the short term and build a more resilient economy in the region for the longer term. Whether the choice is direct government spending or to provide incentives for the private sector investment. Some of the new industry options on this path are already in the public domain: technology-based industries, industries which are focused on exports other than tourism or focused on regional sustainability. Do I hear agriculture? Environmentally and socially responsible industries as well. Another critical role for our regional government in this current environment is to harmonize how we do business across the ECCU as a means to effectively attract investors who are not only interested in a return, but also interested in the sustainability of our region and can stand up to the scrutiny of regulatory due diligence. Looking at the World Bank 2020 Ease of Doing Business survey, within the ECCUs, our country ranked between 93 to 146 out of 190 countries, and we slipped since 2018. We have work to do in this area, and the harmonization of the financial sector framework is important here. Yes, we are moving in the right direction. We heard the governor in his remarks this morning of harmonized legislation in the ECCU, the Banking Act, Insurance Act, Money Services Act. I applaud our start, but I call for action by our region's governments to move us closer to the end, towards the enactment of the relevant legislation across the ECCU. On the regulatory end, important as well, our central bank has taken important steps in this regard. However, there are critical players within the financial sector which are outside of the regulatory oversight of our central bank. A scenario which allows for gaps in mitigating risk. Regulatory oversight by the central bank is critical to the health of our financial sector. We have a great start to harmonization with the existence of our Monetary Council, and I encourage our leaders to increase focus on ensuring that we strengthen our sector as well as ease the process of doing business in the region towards welcoming investors for all of our countries to benefit. You know, my good friend, Dr. Gillian Marcel, she's been saying to me, Michelle, we have an opportunity here in the Caribbean. Other regions have been successfully attracting investments in the blue and green economies. We just must make it happen. So I offer my medicine of stimulating our region's economy to growth. Making this decision is the first step and will require specific and different action and support from other financial players. My fellow FIs, we do have a big role to play in our region's recovery and growth. Our support is needed at every sector. We know that with COVID, if our customers fail, we fail. We have supported well thus far, and now I call on you to continue to support our customers to recover more quickly and stronger. Be flexible with offerings and criteria. Assist with financial management counseling. Look inwardly to our internal processes. Can we work from home, as our governor mentioned? What about data security? We are working hard, and the fraudsters even harder. The impact of the pandemic, has exposed some of the vulnerabilities of our private sector, and it is our responsibility to help them not just survive, but to see the critical need to review business models and adjust accordingly. Our governments need our support as well, where possible. For stimulating economic activity, there's a buffet menu available. Willingness to look at non-traditional business models, even specialized packages for businesses involved in industries that we note as important to encourage our region's growth. Supporting environmentally sustainable projects, renewable energy projects, these are the solutions that require our support across the region. I must recognize the Republic Group for recently becoming a signatory to the UN's Responsible Banking Initiative. This not only allows us to live our value of building successful societies, but brings value to the territories in which we operate, allowing the region to mobilize capital from new sources. These are just some of the few thoughts I have on the new role of FIs. Our central bank has done an excellent job of executing on its mission statement. We have a strong currency, the financial system is active, and banks are well regulated. I also want to congratulate the central bank on their steadfast efforts towards financial integration across the ECCU. The work on the regulatory framework and enhancements on the payment systems going digital are commendable. Imagine the central bank progressed Dcash despite the pandemic. Hats off to them. As it relates to the pandemic, very early on, the governor advised that the challenges necessitated the adoption of proactive and accommodative policies by the central bank in the fulfillment of its mandates. He pledged to work with stakeholders and partners to help mitigate impact of the pandemic on the ECCU. And we have seen this commitment in action through many initiatives implemented thus far, including adjustments to prudential guidelines based on the understanding of the challenges faced by banks. The recent direction on dividend payments is an approach aimed at restricting negative impact on capital of banks. And we know as bankers, it is an approach that we use to mitigate credit risk with our customers. These measures have kept our financial system stable and have worked well up to this point. I do further suggest, however, that we continue to look at monetary and financial policies, adjusting where relevant to ensure needed support for continued stability while laying the foundation for economic growth. The governor's comments this morning, raised my spirits, and I'm so looking forward to tomorrow's presentation on optimal regulatory framework. Nonetheless, just a couple things to put out there. We need to look at policies which lower the cost of borrowing, not only to households and businesses, but for our governments, allowing them to borrow from us, local FIs, in local currency for critical projects. I know that this is not always a difficult topic, but I'll just say minimum savings rate. Continue to look at how we can free up liquidity, adjustments to how we can further manage restructured loans. I'm sure that many of you have read these suggestions as options employed in other world regions, and I ask, can they bring value to the ECCU? In summary, for me, the ECCU's financial sector has a future for which the success depends on a few key approaches, each player acknowledging and acting on their role, and two, acknowledging that we must move forward as a region, not countries, ensuring that our region is successful to the benefit of each country. Let's be brave. We have an opportunity to change the narrative away from blacklists and correspondent banking concerns. We have an opportunity to learn, to grow, to diversify. We have an opportunity to take control of our destiny. I thank you.
Thank you very much, Michelle. I think in the virtual room, we should be applauding in terms of the very thought-provoking comments and ideas that you've placed on the table going first up. I think you've given us a lot of food for thought for us to explore in the question and answer aspects of our webinar this morning. Our second speaker this morning, our presenter, is Mr. Belfield. I'll invite Mr. Belfield to give his remarks at this point. Mr. Belfield.
Pleasant good morning, and thank you all for joining us this morning. To a few, COVID-19 represents just a mere health situation, where the wearing of masks is fashionable and optional. The adherence to health protocols, just another government mandate. The whole pandemic, just a huge conspiracy. But for the many of us who can see beyond those assertions and are able to quantifiably appreciate the real dangers of this pandemic in terms of life lost and impacts on our healthcare infrastructure, workforce and productivity, business and our social and economic financial livelihoods, the picture painted is much more dismal and worrisome. Many have likened this era to the 2008-2010 financial crisis, where excessive risk taken by the big banks damaged financial institutions globally. Except that it is the excessive risk now taken by human beings that are causing concerns to the bank and financial sector worldwide. My friends, we are living in unprecedented times. Our central bank's projection for real GDP growth hovers between a -5% and -7%. And this is going to be accompanied by a sharp rise in unemployment. The ECLAC, which is the Economic Commission for Latin American Caribbean, projected a real growth of -9.1 for the Caribbean, while the IMF had painted a picture of a -9.4. Now, regardless of which mirror you look into to see who's the fairest of them all, the reality is the same. We are living in unprecedented times. Unlike our natural disasters that the region have grown accustomed to, this pandemic knows no boundaries and is affecting us all at once. For the large and more developed countries to have financial institutions that have a robust regulatory infrastructure and large capital and liquidity buffers, their fates are not the same for us. In the emerging markets, for example, in the ECCU region, we're faced with that daunting task of limited buffers and supervisory capacity and vulnerabilities in the sector. The COVID-19 for us has caused an unprecedented global recession with adverse consequences for unemployment and poverty. And we are beginning to see time and time again how critically important for the financial sector to play this role in mitigating any shocks and liquidity challenges. In the case of us, in the case of the EC region, we are continuing to see how, for example, our small economies have to do a balancing act between looking at our healthcare priorities, looking at our national development priorities, and managing the financial sector. We realize that the key impetus to developing our policies and system reside within having a more robust financial system. And that is why, and I continue to be heartened by the impetus and what the ECCB has been doing to alleviate the plights of not only the governments, but also the financial institutions within the EC region. We're continuing to see how the COVID pandemic is impacting our companies, our small businesses, reducing the demands for products, disrupting supply of inputs, and tightening in some of the provision of credit. And for us, what we're realizing too is happening is that slowly but surely, we are seeing incidences of financial distress already creeping in. We're seeing significant adverse impact on the sectors of aviation and tourism, hospitality, and so forth. And we're realizing that because of our size and the limitations of our buffers, we are prone to any economic and financial vulnerability. We're seeing, despite the best interventions of our governments and central banks and our financial regulators, we're seeing how the credit market is taking a nosedive. And one of the things that we continue to do as responsible financial institutions, and I make specific reference to the credit unions which I represent, is that we go directly to the core focus of the issue. How is it that we can help our members to navigate this crisis? We recognize that it's critically important for the country, the economy to rebound. And as a matter of fact, in a recent survey that we conducted, and we asked our members, what are the things that are keeping you up at night? And we revealed in that survey that was done, that the financial impact of the pandemic, the impact on the supply chain disruption, the impact on workforce and productivity, access to finance, reduced income, these are some of the things that are causing our members to lose sleep at night. Now, the daunting task ahead of us requires a cooperative spirit to tackle this pandemic. We see how the financial institutions must now find innovative ways to improve access and financial inclusion for the members they serve, and more so, the disadvantaged and the vulnerable. But whilst at the same time, we have to prudently monitor our prudential performance metrics to ensure that we stay afloat and ahead of time. Great attention must now be placed on credit quality by conducting stress testing, our capital and liquidity position and risk management policies. But while I can continue for the next couple of minutes that I have here to paint this apocalyptical themed portrait of the pandemic, the dust will eventually settle. Along with the pandemic, there will be significant emerging opportunities for us. And the critical question for us will be, are we doing what it takes now as a financial system, as financial players in the market, key stakeholders? Are we doing what it takes now to put ourselves in a more favored position going forward? We need to be in a position to think strategically, to think in a position that would allow us to reap those benefits to come. And that is why we've seen a plethora of opportunities, both in the digital space and also in the strategic space. How the advances in digital technology is helping us to transform the economic and financial landscapes. We're seeing how the introduction of the central bank's digital currency, we're seeing blockchain and other distributed ledger technology, and how they're presenting to us seamless opportunities for efficiency, security, reliability, interoperability of our payment systems, while reducing the cost significantly. We're seeing how these fintech are offering opportunities for governments and regulators to make the financial systems more efficient and competitive, and how we can broaden the financial services for the underserved population. For us, our focus really is on the quality of credit, especially during this pandemic. And I believe, and as the governor mentioned earlier, that this creates an organic appreciation for the adoption of the requisite credit reporting legislation to assist us in monitoring and managing our credit facilities, even during a time of reduced income. Of course, the unthinkable would be a credit freeze, or increases in cost of credit, or even the rational allocation of credit. We can appreciate at this moment how the soundness of a financial system will continue to come into sharp focus. And of course, our vulnerabilities. Government will have to do that balancing act. They will have to look at how is it that they can manage the country's development and health agendas while ensuring that the economies remain buoyant. Our financial institutions must remain vigilant. Financial institutions like the credit unions will continue to play a critical role in bridging that financial gap and alleviating the plight of many. And as our mantra speaks to the core of financial inclusion and access, and more so with the introduction of our own digital mobile wallet, M-L'Argent, which will continue to augur well for the coexistence of similar payment systems in the region to improve the entire financial well-being. My friends, like I said earlier, there's a glass before us, half filled with water. We can see it as half empty, or we can see it as half filled. The important thing for us as responsible financial institutions and critical players in the market is to do our part to assist our governments, to assist our regulator, to assist the people we serve, so that together we can come out stronger from this recession. A rich guy once said, never let a crisis go to waste. There are important lessons that are being taught to us right now about our systems, about our strategic focus, about our monitoring mechanism, about our risk management practices. What are we doing? What lessons are we learning from these teachings that we're receiving now in COVID? Because sometimes even in your worst crisis can come the best of lessons. And that is why as a credit union movement and as a responsible financial institution, we will continue to embrace the challenges. We will continue to remain vigilant. We will continue with one hand on the financial metric while we attend to the needs of our members. And we encourage you to do the same. Thank you.
Let's put our hands together in the virtual room for Mr. Belfield and his comments. Thank you very much. Food for thought there as well, and some ideas for us to explore in the Q&A session. Our third panelist this morning is Donna Wellington. I invite Donna to give her comments at this time. Donna?
A pleasant good morning to everyone. And I want to thank my fellow panelists for those really wonderful remarks around what we can look forward to and what we should be thinking about as we go forward. I want to thank the ECCB for this opportunity to participate in this conference on this very important topic. And I would say that the only thing constant in our world is change. And I've had to say this to many over the last year and certainly over the last couple of months, that change is good. It may be difficult, but it's good. And saying so at the beginning of my remarks around the economic landscape, speaking to the issue of our financial system reminds me of the first conference I came to and attended a few years back. And the governor's first words to us then, I'll only use two of them. He said, innovate and consolidate. And indeed, we have seen many have heeded to that call in the banking sector. And his comments can also be applied more broadly to the islands represented in the ECCU and the governments and the private sector, because the government's private sector and labor must embrace change and see differently. In order for us to meet the very real challenges we face given COVID, and not knowing how long we will be impacted by it, as well as our other main stressor being the 5-month hurricane season annually, we have to really look at what we need to do to change to make sure that we remain resilient. In my brief remarks today, I'll be looking back at the economic trends over the past 6 years, as well as projected key performance indicators we face in at least 6 of our markets, and then the implication for this performance and the economic outlook. And lastly, what we can do to better our circumstances and to wait for somewhat normalcy in the tourism space to ensure that we remain sustainable despite economic shocks. So firstly, I will try to share my screen and look forward, and so that we can see the economic trends looking backward. Can you see my screen?
No, not as yet, Donna. We're not seeing it.
Okay. Yeah?
Not as yet.
Not as yet. Not as
Okay. Yeah, sorry about this. All right, I'll just try to speak to it. Okay. All right. Well, in the first instance, I wanted to speak to the trends in economics, the economic trends and the COVID impact. And what I wanted to share with you was the trend in real GDP between 2014 and 2019, the trend in CBI receipts between 2014 and 2019, and the trend in government debt between 2014 and 2019. And also what we projected as the projected real GDP, the project for 2020, the fiscal deficit for 2020, and the government debt for debt to GDP in 2020 for our markets. But I will just speak to it instead of sharing the screen. So what we've seen in the trend in GDP, and we note that the 2019 pre-pandemic trajectory, there was a pre-pandemic trajectory downward, which was worsened exponentially by COVID, and pretty much all of the 6 markets. And the 6 markets that I'm speaking about are Antigua, Dominica, Grenada, St. Kitts, St. Lucia, and St. Vincent. Notable, of course, is Dominica, where the GDP was higher than everybody else because they were still recovering. The growth in GDP was going the opposite direction to everybody else. And that had a lot to do with hurricane recovery, and that they are not as dependent on tourism. In all markets, we saw a fall in citizenship by investment receipts, and basically, the projected GDP impacts are less on countries that are dependent on tourism dollars than those who are. In St. Kitts, there was a pretty much of a flattening of the GDP growth curve rather than the negative trajectory, and that was based and bolstered by tourism, construction, but also citizenship by investment. And they saw the deepest impact in projected GDP in 2020, given COVID, because of the deep fall off in citizenship by investment receipts. And so we see basically that there's a trend here. A lot of our governments have been focusing on citizenship by investment to buttress their the GDP of the countries. With that falling off, as well as tourism, we have seen some major falls in the GDP growth, and actually a big fall off, as the governor mentioned, during 2020. But there was a negative trajectory prior to that. St. Kitts and Antigua were very reliant on citizenship by investment receipts. And we see that in the challenges that they face going forward. When we look at the debt to GDP, we note that there are some challenges there as well. And in debt to GDP, we see, well, basically Antigua is projected in 2020 to have a debt to GDP of over 100% at 114, while St. Kitts is in a good place, projected at 69%, with Grenada 71%, St. Lucia 85%, St. Vincent 88%, and Dominica at 91%. When we look at what is behind that, we recognize that, as mentioned, citizenship by investment was a key part of what was buttressing a lot of the revenue that came into some governments. But also there has been, especially during the last little while within COVID, some help from the CDB, IMF, and World Banks to support. But the trajectory for debt is growing, and as I think Michelle mentioned, this is a challenge and a concern that we all have to look at. But what can we do to reverse the trend? What do we have? We have natural resources. We have sun, wind, volcanic steam, and very fertile soil. We have a lot of liquidity in the financial system. We have citizens, corporations, and individuals looking for investment opportunities. We have technological connectivity, an educated workforce, and the ability for scale with free movement across the ECCU. So, and these are very low-hanging fruits. We have a lot more than that, but these are the very low-hanging fruits. So what can we do, given the fact that hospitality is going to be challenged for the next little while, and even with vaccines, as the governor mentioned, this is going to be a protracted process. Well, I want to provide at least 4 options that we can look at to try to, and Michelle mentioned this as well, to focus on growth rather than debt, and to make sure that we are starting to see how we can also not just focus on growth, but cut our costs as nations so that we can be more resilient and our revenue and expenditure are more aligned. So the first thing that I want to mention, and I'll give 4 specific examples. One has to be renewable energy. This would be my top choice in terms of something that we as an ECCU should be looking at. And when we focus on renewable energy, that renewable energy transformation requires investment through green energy bonds and focus on, I say citizenship by investment. What I really mean is foreign direct investment on this item. Energy companies should be looking to transform to acceptable renewable energy. And this can be solar, wind, geothermal, waste to energy, and the list goes on. And the impact of that is foreign direct investment structured so that local private foreign direct investment, but not just foreign direct investment, because this can be structured so that local private sector activates or partners with foreign partners, and so GDP growth is possible from economic activity, and increased employment is also possible as well. And the long-term impact of this is lower energy imports, reduce reliance on imported oil, lowering the costs to ourselves, but also certainly a lot of economic movement and GDP growth can be coming from this. But what do we need from our governments to support this? We need to introduce, first of all, renewable energy timelines in every country. Here in Barbados, we have a lofty goal, but a goal all the same, which says that we're trying to get there by 2030. And the fact that the government has set that as the priority basically starts to garrison both the government and the private sector towards this. And foreign investors look at those sorts of goals, and the energy companies as well, to try to aspire to get there, and everybody starts to move in the same direction. And also there needs to be the regulatory framework has to be structured, and policy framework have to be structured to support renewable energy. And that certainly is something that we require from our governments. But what's required of the financial system, because that's why we're here. And we need to support corporate loans for renewable energy, existing corporations to even use their roof space and land for solar and wind energy. And we also need to create a landscape to attract investments by citizens all, through structured renewable energy investment schemes, where ordinary citizens can, through IPOs, unit trusts, or bonds, participate in the bounty that is renewable energy and the revenue that comes therefrom, and therefore start to use that money that's in the system for good investment use. And we also need to encourage individual residential investment to reduce cost to households. Every roof is a potential investment opportunity. I will give a personal example, because at the beginning of this year, I did so, and I certainly put the panels on my roof, and I haven't paid an electricity bill since. And for more than that, because I chose to put more on my roof than I can actually use, I have the wonderful experience of the electricity company paying me. And I can't tell you how awesome that feels on a day-to-day basis. They pay me versus I pay them. And so that is something that also is helpful to the individual households. It is a revenue generation activity and an investment in future generations as well. So renewable energy is one, and I think everybody can see that we all would have a part to play there. And there's a lot that the financial system can do to encourage corporate loans, the landscape for structured investment, and that is a massive area here that is so not tapped into by our region as a whole, and then also encouraging people individually to invest in it for themselves. The next one I want to mention is food security. This also is a cost saver, but when generation of revenue, it is a cost saver, but also a GDP growth possibility as well, and a generator of revenue, because it just reduces and lowers our food imports. And focus on agriculture and animal husbandry to allow for entrepreneurial exploits, especially in this time when unemployment is so challenged in the hospitality sector, is indeed one of these areas that we must look at. We have very fertile soil, and this should also include agro-processing. There are many things that we can do. And also, given the Eastern Caribbean Currency Union and the freedom of movement across there, I'm going to suggest a couple of things in this regard. Food security, GDP growth is possible, certainly from entrepreneurial economic activity and on a larger scale. And the governmental support that is required here is intra-island collaboration to determine focus on crops per country that allows for scale. Crops or animal husbandry, as the case may be. And also providing a framework for support for startups and by use of maybe small grants or plots of land for lease or rental, anything like that, that will allow people to be able to make a start, to start in this regard and grow from there. And how can the financial system support this? Well, we can support using or by supporting small businesses that are well structured, and for corporate loans to support this activity, as well as the bigger items of agro-processing, which I think is underutilized, but we certainly can do. The next one I want to mention has to do, and is specifically a focus for our governments, because our governments are borrowers as well in our financial system, and we, just like we would have conversations with our regular borrowers or normal corporate and retail borrowers, sometimes we have to have these conversations with our governments, because it is sometimes required that we take a hard look at where we are. And my third item is that governments really need to address fiscal imbalances where possible. There are some countries, and had I been able to share my screen, you would have seen that there are some real concerning areas, and there are larger countries as well, and the economic engines within the ECCU that are the most challenged. I was heartened to see that St. Lucia, understanding their plight at this point, has actually said that they are willing to get help from multilateral sources to support. And speaking specifically of the IMF, the words were actually said apparently, that they would be willing, if things continue to worsen, to go there. And that is heartening to hear, because it is important that you recognize when help is required and actually ask for it, so that things don't get any better. I'm actually sitting in a country where that was not actually done in a timely manner, and we all suffered for it. And if nothing else, I would like to suggest that the earlier the better. it is certainly better to self-identify and find homegrown solutions, no matter how hard, than for them to be mandated by a lender. So the action is to really take a hard look at the budgets of each island and stop bleeding and prioritize spend. And it's heartening, like I said, to see what St. Lucia said and accepting the help for debt realignment and structural reforms. And then to also identify potential niche areas for foreign direct investment, not CBI, but FDI, for activities and ongoing economics with economic substance service entities, for like example, medical services, technological companies, call centers, research and development. There are many areas where we can play, and there are many places and there are many persons many entities that we can attract, especially given the economic substance rules now that will allow for employment in our islands by attracting these particular service entities. And the long-term result obviously would be a better maintained fiscal balance, and that basically will allow for an improvement in key performance indicators like debt to GDP and so on. The last one I will mention, and it is dovetailing into the next session that there's going to be, is that of digital transformation. And the action basically is investment in the digital modalities by the private sector to reach client bases and use a logistical framework for delivery of physical goods where possible across the entire currency union. There's free movement of people, and therefore there should also be that free movement of physical goods wherever possible, and that allows for the scale that is required. And the impact there is a wider customer base, services offered beyond physical borders, increased economic activity, homegrown apps that would facilitate that, homegrown tech service companies that would pop up to start this activity, and in-company staffing increases and more employment to supply these and support these activities. And obviously, the long-term result is improved GDP growth and reduced reliance on tourism and CBI. And so the governmental support required is a collaborative policy framework across the ECCU to encourage private sector to go digital and facilitate logistics for intra-island commerce. And what does that mean for us in the financial system? Of course, and what Mr. Luard didn't mention is that my passion certainly is digital payment transformation. And that's what, wakes me up every morning thinking about. And certainly that is one of those things that we are working on right now, and we need to work on more as a group. Digital payment transformation to support these activities and lending to support these activities. So I leave these few thoughts with you as to what we can do to reverse the trend. I thank you.
Thank you, Donna. Thank you very much. I say thank you to all of our panelists. We put our hands in the virtual room to you as well for the thought-provoking comments and feedback that you have given us this morning. I just want to spend just a moment just to summarize some of the points that have been made before we get into our question and answer segment. From Michelle, and I think there's been a lot of overlap in terms of what has been mentioned this morning. From Michelle, Phoenix, and Donna. I think it's clear from the comments and from your presentation that there's a role for all of us within our economic or financial ecosystems to play a role in terms of how we come out of the pandemic. Clearly, there must be an emphasis on growth. I heard that coming through all three presentations. Panelists looked at in terms of where we were going into the pandemic, the high debt to GDP ratios, significant revenues, but the revenues were mainly driven by CBI flows. But I think what's important, and I think the important point that has been made is in terms of the need for growth spending. Michelle highlighted in terms of the role of the government, in terms of growth spending to stimulate the economies. providing incentives for the private sector investment, and to lay the infrastructure and the groundwork for growth post-pandemic. She also highlighted the need for harmonization across how we do business. She clearly highlighted what we've done in terms of the Banking Act, the Insurance Act, and the Cooperative Societies Act. But she highlighted, and quite rightfully so, that is much more work to be done in terms of harmonization. I can think immediately of one particular area that many of the FIs have brought up before in terms of harmonization of the AML CFT legislative framework. And I think that's one of the key areas that's very relevant to our financial institutions. Another point that came up is in terms of remedying the regulatory gaps within the financial sector. I heard Michelle make a particular point, and in tomorrow's closed session, there's a presentation on the optimal regulatory environment or optimal regulatory framework for financial sector within the currency union. Michelle made a point that I'm going to invite her probably first in when we get into the Q&A session. I think I heard her, if I heard her correctly, say that the entire financial sector should come under the oversight of the central bank. I think I would have heard her say that a few times in terms, and I wanted to explore that in our Q&A session. Role of the LFIs in terms of being very flexible in what we are doing, working from home, whether you have the ability to continue to work from home, whether you have that level of your services and the services that you provide, whether they are the digital options that are available to your customers to offer all of your services. Data security, of course, is a key point that we have to keep in mind with all of these digital options. Michelle touched on a point that I think is critical in terms of the role of the FIs post-pandemic, is in terms of them providing that sort of financial advice for their customer base. Touched on the role of the central bank. We need to relook our monetary policy tools. I think that's a point that we have to explore in the Q&A as well. Michelle, you touched on the very topical and I think frequently discussed minimum savings rate. And whether this could be, the removal of the MSR could be a way that we could lower the borrowing cost. You talked of improved liquidity, and what are some of the policies that we can use for loan restructuring in order to bring about a more possibly level playing field in terms of what we have within the financial sector. Phoenix touched on very similar positions, more so from what he's seeing from the credit union sector. He rightfully pointed out in terms of our priorities. Clearly, our governments are facing with that choice in terms of health spending versus growth spending and beefing up our health infrastructure. I think that's one of the critical areas that our governments are looking at, where they're spending those funds and making that decision about spending for growth and building our infrastructure, spending for resilience, as opposed in terms of spending for healthcare and our healthcare spending. In terms of what Donna pointed out, again, the point about growth, she highlighted some of the strengths in our financial system in terms of our liquidity, our technological connectivity across the region, opportunities for scale within the currency union and Caribbean. So individually, we are very small, but even when we look at the currency union, we come together, we have a population of around 600,000. The opportunities for scale are there even if we go beyond the currency union. The very well-educated workforce. Focus on growth in terms of our opportunities. And she highlighted three main areas that we can do this in terms of focus on renewable energy and investment in green bonds, foreign direct investment in terms of this particular area in renewable energies. And companies should be shifting their focus towards renewable energies. And our financial sector, or FIs, should be supporting corporate loans to renewable energies and residential lending. She gave her own experience in terms of, as we point out, even here at the central bank, what we've done over the past 6 to 12 months in terms of our investment in our panels, or solar panels, in terms of moving towards that renewable energy source of electricity. There's some opportunities there for our financial sector. Secondly, she spoke about food security. And thirdly, in terms of digital transformation. So there's a lot of ideas and a lot of food for thought that we have in terms of what's been presented to us today. If I can start off in terms of posing our first question to our panelists. We would have looked at some of from your presentations in terms of the potential opportunities. But if you can, each panelist can be very specific in what do you foresee as a banker, and even in terms of in the financial sector, and what you are seeing in your boardrooms and in your management committee meetings. What do you see as the potential opportunities within the financial sector, and how can we optimally leverage those? And what do you see as the greatest challenge? So if you can highlight your single most important potential opportunity and your single greatest challenge, if each of you can just spend some time discussing both of those.
Well, I'll start if I'll start the ball rolling. I see the most potential opportunity. How to all play well in the sandbox here and come to agreement with respect to some of these issues. I think that we can really start to turn this engine on and really let it hum in the next decade.
Thank you, Donna. Phoenix?
Absolutely, and thank you for the question. From our side, what is really the burning concern for us, and what we think is going to be critically important in addressing the challenges that we have going forward, is how is it that we rethink our business channels across strategies, operating model, and organizational design. The COVID pandemic, as I said earlier, presents unique opportunities for us, and we need to see whether it is that what our strategic design, what we have originally envisaged and created and plotted, are still relevant to where we are going. So we need to look at it from that spectrum and decide, use the time and the opportunities to put in the necessary tweaks to ensure that as a company, not only that we remain relevant and remain as a going concern, but that in the foreseeable future that we can reposition ourselves strategically. In terms of our greatest concern, like Donna said, it is having a nimble and adaptive regulatory framework in place, one that helps and fosters innovation and creativity. We mentioned, I think, at a few meetings about how critically important is it to have legislative framework that is forward thinking rather than reactive. And this is what is going to help us to bridge that gap, to bridge that divide that we have now between how is it that we remain stagnant now and how is it that we're projected to grow once the pandemic subsides. So it is important for us to have the accompanying legislations, and we mentioned earlier about one, like, for example, the harmonized credit reporting. We talk about the credit bureau legislations. These are all critical pieces of legislations that are going to help us to go forward and address those concerns that we have. So for us, from a business, financial institution vantage point, we need to begin to relook at those strategies. But even as we look at all of the channels of operation, interaction, how do we interact with our customers, our members, those people that we serve? We will look at our strategies and business channels, our adoption of digital channels. How do we foster or improve digital adoption technology within our own architecture? How do we adopt hybrid models? All of these things will come into sharp focus if, for example, we have not relooked at our strategy. And that's why it's important. So yes, from our vantage point as financial institution, we need to use this time as a critical moment for introspection. On the more significant macro front, we think that having nimble legislative framework is certainly going to help us to get there quicker.
Thank you, Felix. Michelle?
Thank you, Chris. Well, it seems like in the C-suite in the financial sector, we all think similarly in the what are our opportunities and what are our challenges. Maybe our minds meet up there somewhere in the dream space. You know, really, I'm going to start with the challenge. The biggest challenge is the regulatory and the legislative framework. It must support us. And when I think about how we move forward, my mind always comes back to how do we motivate and encourage our policymakers to move it along? Because without that environment, without that harmonized environment, without modern legislation to support what we want to do in the banking sector, it's not going to happen. Biggest opportunity. The biggest opportunity I see is for us to really fulfill our mandate as bankers, as financial institutions. And that mandate really is to facilitate the dreams of our customers, our countries, our regions. How do we support even better? Donna spoke a lot about the future of renewable energy. And yes, I want to expand that to sustainability, all sustainability projects for our region. Our region can no longer depend on, in the Eastern Caribbean, tourism. In my own home country, Trinidad, oil and gas. We cannot depend on what we have become accustomed to for many, many years. We must move forward. We must go into innovative and sustainable industries. Those are the opportunities for financial institutions. That's what I see. How can we arrange ourselves as financial institutions to support those dreams? That is what we should be focusing on. And once again, I call on our leaders and our decision makers. As my old grandmother used to say, take some turpentine, move along with it. We need to get it going.
Thank you, Michelle, and thank you to the panelists. We have one question so far that I'm seeing posted here, and it deals mainly in terms of the alternate options, or they're longer optional but mandatory. I think this is what the person who is asking the question is asking. So they say, can guidelines, strategies be developed for financial institutions, business, governments, and the general public to adopt some minimum best practice as it relates to these virtual, decentralized, or remote options? And who do you think should be the lead or champion of such an initiative? So I think should it be standardized, or should there be standardized options as it relates to remote, virtual options? And who should be the champion of standardizing these options? So I throw that out to the panelists. I can start with Phoenix, and then we'll move on to the other two panelists. Thank you very much.
Thank you very much for that that interesting question. And I will borrow from a quote from Jack Welch, which is oftentimes repeated by our dear governor. He says, when the rate of change on the outside exceeds the rate of change on the inside, the end is near. And what is that saying to us essentially? The moral is the story of that. How the question is phrased is that it has become more of a compulsion. Well, to put it frankly, it is only a compulsion if you're seeking to remain relevant as a player in the market. If you, however, share a different view, then it's perhaps not a compulsion, because if you adopt these strategies to survive, you will view it as a necessary ingredient to your success. So yes, it is becoming mandatory based on your strategic priorities and if you intend to remain as a going concern, because the market forces determines who gets paid and who doesn't get paid. It determines who thrive and who doesn't. It determines who grows and who remains stagnant. So we must ensure that, notwithstanding that, if our priorities are to remain relevant, then these changes are necessary. Now, as it relates to the question on can the guidelines and the strategies be developed for financial institutions, of course they can. It is critically important, and that cements the point that we raised earlier about having nimble and adaptive legislative and regulatory infrastructure, because this is what is going to set the platform. And I made a case, for example, in the case it was Kenya, in the financial system when they were introducing the payment platform, which is the M-Pesa. And somebody asked the central bank governor, but why aren't you regulating these players? And the reaction by the governor was that we will allow them to grow big enough to be regulated. Now that is a departure from the norm, a departure from the status quo, but it's actually creating that innovative and strategic platform for which companies and innovation hubs can grow and thrive. So yes, this can be developed over time. It can be fostered through adaptive and nimble legislative framework. Now, as it relates to who you think should lead, I had a math teacher that always used to say, listen, when you come with questions, come with responses. So we all should lead. Now, critically important is that the government on its side help us to foster, because they have the biggest voice. When the government, for example, in the case of Dominica, the government of Dominica has set up a posture for digital adoption. They have given this thing top priority post Hurricane Maria. And that is why it's creating that enabling environment for startups, digital technology companies to come up and thrive. So yes, I believe the government should be the leader, but that should not take away from the responsibility we all have to throw our hands in, or throw our hats in the ring. Thank you.
Thank you, Phoenix. I'm going to also throw this question to Michelle. Michelle, can you also pick up on this question as well?
And I go back to something that I said in my summary points. You know, each of the players, we all have a role to play, and we have to acknowledge that role and act on it. So for governments, if it is creating, providing incentives to move us in that direction, banks, financial institutions, we must accept. We must acknowledge the wave of the future. The way of the future is digital transformation. We should not be waiting on anyone to lead the way in that regard. We must accept our responsibility and move on. And I would say also to our businesses, you need to accept as well your role in encouraging that, your role in investing in technology-based industries, your role in your own businesses in adopting the digital way. So I'm not so much on the standardization. I would say to the question, no, I'm not on the standardization, but I'm definitely on the part of each stakeholder acknowledging the role that they need to play, accepting the role that they need to play, and acting on it.
Thank you, Michelle.
Thank you, Michelle.
Donna,
Thank you,
if you have
Michelle.
anything additional to
Michelle.
add on this particular question, you can come in now.
Yes, I just want to add the last word that the governor said a couple of years ago. It probably was around 2016 or 2017. I can't remember which conference it was. And I'll just add his last word and then make two comments. He said, innovate, consolidate, or terminate. And that's what happens if you don't change. Change is necessary. It's good. It's necessary. It can be difficult, but those to the point of my fellow panelists, is survival of the fittest out there. We do live in that world, and if people don't move with the times, their businesses will become pretty much extinct. So it's important for us to all try to see what we can do to change.
Thank you, Donna.
Thank you, Donna.
We
Thank
have
you,
another
Donna.
question from our Facebook listeners, and I think this one is more so for Donna. I believe this is in reference to a point that she made in terms of when she was talking about agricultural diversification. So the person is asking, what is meant by crops per country? Is this a predetermined crop cultivated by different countries so that they all don't produce the same crop? I think you mentioned something about agricultural diversification, Donna. So I believe this question is geared towards you.
And I think the person that asked the question has it exactly right. How do you get scale and economies of scale by just not everyone just doing everything they thought to do, but a mindful approach. And that's why I said the government support is required to allow for intra-island collaboration to determine the focus of crops to allow for that scale. So, one entity that is you don't ask Antigua to do bananas when their soil is not the same as Dominica or Grenada or St. Vincent from that perspective. But at the same time, what can grow in Dominica may not grow well in Antigua, what can grow well in Grenada, and maybe everything can grow well everywhere. But the point is that one place focuses on it, and that allows for agro-processing to follow that as well, because then you don't have logistical issues with respect to getting the product to where it is you need to go. But we are small enough, but yet and nimble enough to be able to have those sorts of conversations at a level at the Eastern Caribbean level, to be able to try to see where the focus could be for agro-processing in one place, but also crops, focus on certain crops in different countries.
Thank you, Donna. I think there's another question. I think this one is geared towards the ECCB, so I'll look at it quickly and give a quick response. So the question is, will the ECCB now request all financial institutions? I think this question is in terms of climate risk and climate finance. Will the ECCB request that all financial institutions, clients and businesses present and future, when seeking loan, to have their report or reasons for green initiative to deliver net zero commitments? So I would say we are not quite there. What we are looking at, and I'm giving you a bit of peek into our next strategic plan. One of the objectives that we have in our next strategic plan relates to climate risk resilience. And one of the key issues there we're looking at as the Bank Supervision Department is in terms of climate risk mitigation. So some aspects of that, we are developing a climate risk supervision framework that would then address some of these issues. And that's as much as I would get into it at this point, but we are not quite there. But within our next strategic plan, or probably next 2 years, we'll get into more detail as to what we are thinking as it relates to climate risk supervision and what would be required from our financial institutions. There's another question, and I think it relates to climate as well. So one change, I believe that's what that is, one change that has been made is that all pensions must go towards climate change. And should all businesses in the Caribbean now adopt this new agenda? So I think the questionnaire is referring to perhaps the need of pension funds to invest in climate-related projects, and whether we think this should be expanded to all other businesses within our economy, within the currency union. I'll throw that out to any of the panelists who wants to address that.
I think I want to go back to my specific thing on renewable energy and the item that I mentioned around creating the landscape to attract investment by citizens all, through structured renewable energy investment schemes. When when the renewable energy schemes are focused such that initial public offerings, unit trust, bonds, any kind of scheme is set up and regulated such that anybody can buy, it means then that regulated system can be used and purchased by pension funds and anyone else that wants to get involved for investment. And so I think the critical thing here is to monetize this great resource that we have and allow for investment from individuals all the way up to corporations and funds. And that way everyone gets to participate, everybody shares in the bounty, and it's structured in a way that everybody can feel safe that investment is one that they can be comfortable with.
Thank you, Donna. We'll pivot a bit and we'll go to our live polling questions. So as we've done with many of our recent conferences, we give our participants an opportunity to weigh in a live poll. And this morning, so I'll invite the technicians to get the information on the screen so that you can participate. So in terms of how this works, we invite you to go to menti.com, menti.com, and when you get to that website, there's a code that you have to enter. I think it's on your screen, but I read it out. So it's 9668603. And the first question, do you think that the ECCU's financial system will remain broadly stable over the next 12 to 24 months? So it's live, we can see our responses. So I would say the majority of our participants, although we've only had, if I'm seeing correctly, 26 responses so far, 20. So I'll give our other participants an opportunity to come in on this question. So majority, I think, believe of our participants in this poll, and we are seeing responses come in still. So I'm told we have about 121 participants on Zoom, and then there are others who are participating via Facebook and our YouTube channel. So majority, I think, about 80-20, think, well, about 79 yes believe that our financial system will remain stable within the next 12 to 24 months. 18% of our respondents say no, and 4% are uncertain and worried, 3%. But I think the majority of you believe that we will remain stable. That's interesting. Very interesting results. I would say about 80-20. Very good, and I think we will continue to put our resources together, our minds together to ensure that we remain stable post-pandemic as we get through the pandemic. We can move to the next question. So a second question, which factor do you believe will pose the greatest risk to stability in the ECCU over the short to medium term? I think the responses are as expected when we created this question, based on what we are seeing from the pandemic and the need for loan moratoria and the potential for restructuring of some of these loans based on the downturn in the economy and what we are seeing from the tourism sector. As you heard Governor mention this morning, we are forecasting that we will not return to pre-pandemic tourism levels until 2023. And I think this would be a significant impact on what we are seeing in terms of non-performing loans in our financial sector. And so too, the participants are along the same line with that one. So 87% of you believe that the greatest risk that we face to stability is in terms of the quality of credit. We can move to the next question. Our third question, which should be the greatest priority to ensure a strong, diversified, and resilient financial sector in the currency union over the medium term? Give a bit more time for other participants to get in. So we have 68 responses so far. I would love for us on this particular question to get to as high as 90 participants or 90 respondents. We are seeing so far that about 60% of the respondents believe that risk management, and I think I would attach to that governance as well, the key is the key priority in terms of ensuring a strong, diversified, and resilient financial system. It's interesting that many of you think that effective regulation and supervision at 14%, but it's expected. And I think even from our perspective at the central bank, we often, and many of you, as we speak to you, we emphasize the importance and the significance of corporate governance and risk management in our financial systems. It leads there, or it starts there. And even in terms of our risk-based supervision framework, governance oversight underpins all of what we do and what you do in terms of your first, second, and third lines of defense. We are at 80. I would love for us to get to 90 on this particular question. Okay, I think we are at 82, but I think we can stop here in this question. It emphasizes what we need to do in terms of licensed financial institutions, the importance of risk management and governance for that strength and diversification and resilience of the financial sector. So thank you very much for your participation. This is a very useful tool that we utilize, and we can get very real-time polling and your input in terms of what you're thinking. We have just about 2 more minutes for a Q&A session. And I would want to, there's one additional question that deals with digitization. And I think it's a very important part of it. How do you see, and I'm throwing this out to the panelists, and I'll probably start with Michelle, and then we'll do Phoenix and then Donna. How do you see the impact of digitization on employment and unemployment, given the current trends suggest that workforces tend to reduce their workforce as we introduce more digital platforms? So what do you think is the impact, or what would be the impact on employment or unemployment with the introduction of digital options? Michelle?
Thank you, Chris. So I am not a proponent of digital transformation moving us into the realm of more unemployment. Absolutely not. I do think that what digitization allows, it allows for new types of industries, entrepreneurs, to get involved. So within our own sector, whilst we think that digitization may mean less employees, it actually means, for me, and for Republic, I would say definitely, it means, reassigning our resources to more productive use, I would say, towards assisting our customers, more advisory services. And so, whilst we allow the technology to do the mundane activities of banking, and allow our human resources to really get involved in supporting our clients. So no, I do not think that digitization or digital transformation means a higher level of employment. Maybe in the short term, until persons really understand, decision makers, heads of organizations really understand what is important, more important, to guide and lead their organizations into the future.
Thank you, Michelle. Phoenix?
Thank you very much, Greg, for that question. And it's really a pain point for most financial institutions. But I can tell you, there are a couple of things that we focus on when we look at digital transformation strategy. For example, we look at the issue of retooling or reskilling or development of soft skills, transfers of intellectual assets of the company, intellectual assets of the company to other more productive areas, as Michelle said earlier. So in some instances, and that is why companies that look to go through digital transformation must see how is it that they will address that critical human side of it, the soft side of digital transformation. Can we use the current human resources pool that we have in talents? Can we reskill them? Can we retool them? Can we rechannel them into more productive areas? Can we have them deal with a softer side of business and let the technology drive efficiency and productivity? So in some instances, and I agree with Michelle on this one, in some instances in the short term it can, but then we must also embrace the other side of it, which means that it creates a, and if you look, for example, the introduction of let's say, for example, Dcash, the ECCB Dcash, it on one side is going to have impacts on, let's say, the income streams of the financial institution, because obviously it's going to be lowering the costs, lowering cost to borrowers, to the users of it. But then some of the financial systems may find that income streams are now being dwindled. But then it also creates additional opportunity for employment. So similarly, you'll find instances whereby in one side it restricts and in the other side it opens up. Again, we have to look critically at our digital transformation strategy and ensure, as Michelle said earlier, that it is tied in intrinsically to how we are going to progress on the human side of it. So and this is the pitfall of many institutions. When we think strategically, we adopt the technology and then plan the strategy. It should be the inverse. It should be we plan strategically and then adopt the companion technology that will take us in that direction. So once we look at it from that vantage point, I think there would not be as much concern in terms of retrenchments and so forth. Thank you.
Thank you, Phoenix. Donna?
Okay, so for this one, I really do think that while sometimes there is some dislocation because of a change in how we are doing business, it certainly opens up the door for entrepreneurship and enfranchisement in a different way. And I mentioned some of those in my digital transformation conversation earlier. I think that homegrown apps, homegrown tech service companies, and in-company staffing in those particular areas will require our workforce to be retooled in a lot of ways, and for us to think about digital transformation in an all-embracing way. We have to innovate, we have to pivot, and if we stay the same, change is not happening. And if we insist and dig our heels in, that we need to employ people in a certain way, we are going to be shooting our own selves in the foot. What we should be encouraging is entrepreneurship, enfranchisement, and also retooling of our staff.
Thank you very much, Donna. We are to the end of our panel this morning. And before I give some concluding remarks, I want to invite our panelists just to spend about 2 minutes giving their concluding thoughts on anything that we would have discussed this morning, or any thoughts that I would like to share with us on this particular topic. I think we'll begin how we started, with Michelle, then Phoenix, then Donna. So Michelle?
Thank you very much, Chris. Very, very, very interesting conversations we've had. I really like the alignment across all of our panelists. We understand very clearly where we must go as a region. I think in a nutshell, what has been said this morning is that our region's future and that of the ECCU's financial sector is in our hands, in the hands of all our players. I close again by calling on all players, governments, FIs, regulators, investors, to be brave in the development and execution of the changes necessary for our region's sustainable growth and for resilience. I want to put it out there. I want to delegate upward a little bit this morning. I want to say that the Republic Group stands ready to support our region during this journey. Give us work to do. Thank you.
Thank you, Michelle. Phoenix?
Yes, thank you very much. And kudos to a great panel and host, of course. In the first instance, I must applaud the visionary and the forward-thinking approach of the ECCB led by the Governor Antoine. And the reason for this is that the reason that we have such a resilient, and that's why you've seen it 80-20, just a little 3 trickled off, but then it came back into focus. The reason we're seeing that is because we've had a proactive approach, and that is what I want to encourage from the side of the ECCB, to continue to adopt that proactive approach to managing our financial systems, our entities, the regulated entities, and the continued guidance that it gives to the government. On the government side, I want to encourage the government to continue to embrace the private sector, embrace creativity and innovation, provide the critical tools necessary for startups to thrive so that tomorrow they can become the big conglomerates to us. And to the financial institutions, continue to be empathetic and sympathetic to the needs of the people you serve. Like, for example, us in the credit union movement, we try to keep a very close relationship with those people we serve, because without them, they're no us. And that is why we want to ensure that even now that they're going through challenging times, we as financial institutions are also going through challenging times, but we have to ensure that we help them to bounce back, because once the people we serve are able to bounce back, the small businesses, the mom and pop shops, the disenfranchised, the disadvantaged, the woman who's in agriculture, these are the people that we need to ensure that they're given the necessary tools and financial support. And I always make the clear distinction between financial inclusion and financial access. The money is there, but if we have no real opportunity at getting funded, then we are helpless. So that's what I want to encourage all of us. And to the question that we asked earlier about who's leading the change, it starts with me. It starts with the credit union. It starts with the banks. It starts with the government. It starts with the regulator. It starts with all of us.
Thank you, Phoenix. And Donna?
I just want to say again, thank you for this great panel. Thank you for this topic. I think it's critical for us to think about at this time. And I do just want to reiterate what I said earlier. We do have what we need, at least to start our process in reversing the trend that we are seeing, the trend of high debt to GDP, the trend of reliance on citizenship by investment for our livelihood, the trend for our revenues, and the trend of not focusing on what we have and what our resources are. And I would like to see us reverse that trend by looking at what we do have, mobilizing the natural resources that we have, mobilizing the liquidity in the financial system that we have, allowing our citizens to have those investment opportunities to provide for generational wealth, and to use our educated workforce and the availability we have for scale and free movement across the ECCU to really make a change. But it starts with the governments, the financial institutions, corporations, and individuals all having a common goal of not throwing up our hands in the air and saying, well, we can't do anything until tourism comes back in 2023. And looking right now at what we can do to solve our problems and not allow for others to have to solve them for us. We can start to look inward and to come up with strategies and ideas. And the whole idea of the intra-island connectivity and the ability for us to work together is so powerful and will allow us to be able to really mobilize the resources we have for good.
Thank you very much, Thank you very much, panelists. So, in terms of a concluding remarks, what I would like to do is to just give you 3 quotations from some articles that came out earlier this year during the pandemic that look at the future of banking. So the first is from an article from Forbes magazine on August 3rd, 2020. It said, by 2030, banks will be invisible, connected, insights-driven, and purposeful. The second is from the McKinsey consulting company. It said banks of the future will fundamentally have to shift the way they find and develop talent. And the third quotation is from the Deloitte publication, Bank of 2030, Transform Boldly. And in that publication, it says, to be successful, the bank of the future will need to embrace emerging technology, remain flexible to adopt evolving business models, and put customers at the center of every strategy. Thank you very much, panelists. Thank you, all of you who have participated in this first panel. And I think those thoughts from these 3 publications summarizes succinctly many of the topics and conversations and areas that we've discussed this morning. Thank you very much for your participation.
Ladies and gentlemen, that was certainly a wonderful and thought-provoking discussion on the ECCU and from the perspective of some of our leaders in the financial space. Let me take this opportunity to once again thank Mrs. Michelle Palmer-Keyser, Ms. Donna Wellington, and Mr. Phoenix Belfield. And most importantly, a special thanks to our moderator for this morning's session, Mr. Christopher Luard. At this moment, we will take a very short break while we allow our second panel to get into place. Please don't go anywhere.
Hey, there is something you need to do. Go to the Google Play Store and download the Smart Finance app. Yes, it's the Smart Finance app. Just type Smart Finance app in the search area, but make sure to type the $ for the S in Smart, and you will find it. It's a bright yellow and green bulb with a $ in the center. This app is useful and provides lots of information about savings, budgeting, investing, and other financial matters. So be smart and download the Smart Finance app today. Hey, there is something you need to do.
I am connected.
I am connected.
I am connected.
I am connected.
Are you connected? Have you liked the ECCB Connect's Facebook page and subscribed to the YouTube channel? It's quick and easy. Next time you go check in for the latest coup on Facebook, just search for ECCB Connects and hit like. While you're at it, check us out on YouTube. Search for ECCB Connects and hit subscribe. And just like that, you're connected. But don't keep it all to yourself. Invite your relatives, friends, associates, and even your Facebook stalkers to get connected too. Hey, you're not on Facebook? No problem. Send us a WhatsApp message to 662-2561 and we'll connect you to our broadcast list. Why should you connect to ECCB Connects? Because as a member of the ECCB family, you have a responsibility to help let our people know who we are, what we do, and how we serve them. So come on, get connected.
Also send
Welcome back, ladies and gentlemen, to the second session of the second annual conference with licensed financial institutions. As we move into the second session, I'll invite our moderator, Governor Timothy N.J. Antwine, who needs no introduction. Governor Antwine has been serving as the governor of the Eastern Caribbean Central Bank since 2016. Let us welcome Governor Timothy N.J. Antwine.
Thank you very much, Mr. Master of Ceremonies, and you're doing an excellent job. And I'd just like to say add my thanks to the previous panel, Chris and all of the panelists, for what was clearly a very enjoyable session. So thank you very much. So we now turn to a second and final session, which is financial inclusion, improving financial inclusion through digital transformation. I think all of us might recall, it's only been 9 months, but at the outset of this pandemic, you would recall there were persons who had checks that could not be cashed as banks were closed. There were persons who wanted to access ATMs, but there were lockdowns. There were people who needed to get to the supermarket, but could not get to the supermarket because they had checks that were not cashed. I give these simple examples to illustrate what we found at the outset of the pandemic, with people not being able to access financial services because they were in analog mode. Now, fast forward 9 months later, and I think we can all readily acknowledge that connectivity and digital tools have been a lifeline in this pandemic. And many of our people have had to pivot, adjust to those new realities, and in doing so, to embrace these tools for them to transact. Of course, it goes well beyond the financial system. We can think of how it has changed our lives in the area of work, worship, recreation, among other things. So we want to spend some time this morning looking at this whole issue of how do we improve financial inclusion, and how can we accelerate our digital transformation process, which is key to the building resilience of our region, not just as a response to the pandemic, but ultimately as our transformation for building stronger and more resilient economies. With us to discuss this very important issue, this theme, are three very distinguished panelists. I will not go through their bios. I think they were made available to you, but I do want to recognize Mr. Oliver Massetti from the World Bank. Oliver is the financial sector specialist. One of the things that Oliver is involved in right now is the Caribbean Digital Transformation Program, and you'll hear more about that later on as we go. I then want to introduce to you Mr. Kervin Tobias. And Mr. Tobias is the head of monitoring and evaluation at the OECS Commission, a very important partner in this project I just mentioned, among other things. And you will hear from him soon. And last but by no means least, my colleague, our Chief Risk Officer and Chair of our FinTech Working Group, Ms. Charmaine Powell of the Eastern Caribbean Central Bank. That's our panel. And so I'm very pleased to have them on board. So here's what we're going to do. We're going to start by asking the panelists to give a brief perspective for a few minutes, maybe 5 minutes or so, if they wish. And then I will pose some very specific questions to them. We do have a Mentimeter poll for you. Oh yes, we can not miss that fun. So I think we have 3 questions lined up, which we will give you a little later in the proceedings. And then, of course, we want to turn to you and take all of your questions and comments. So that's the lineup for this second and final panel. And now I'd like to perhaps start with Oliver to make his remarks, and then I will go to the OECS, and then I will go to Ms. Powell in that order, if that's okay. So, Oliver, if you can hear us, go right ahead with your opening remarks.
It's really a pleasure to be here and to have the opportunity to talk to all of you. I mean, I would have preferred, obviously, to be there in person, but unfortunately, I have to address you from rainy Washington, but I guess that's the way it is these days. The topic of the seminar, financial inclusion and digital transformation, is really of very high importance for us at the World Bank. Financial inclusion is a crucial component for reaching the World Bank's twin goals of eradicating poverty and promoting shared prosperity. However, when you look where the world is, and more specifically where the Latin America and the Caribbean region is in that regard, it is not yet very promising. The latest data we have seen is that in Latin America and the Caribbean, only roughly 55% of the population have a kind of transaction account. And as you all know, a transaction account is the most basic form of financial inclusion, as it is usually the starting point which allows you to then upgrade to higher, to more sophisticated products that allow you to save, invest, and obtain insurance. We think that digital transformation offers a pathway to deepen inclusion. But before we go there, maybe just a few brief words on what we mean when we talk about digital transformation in the financial sector. It is basically the intersection between new technologies, such as blockchain, such as APIs, open banking, such as biometric ways to verify identity that leads to digital ID programs or even more sophisticated means. And it's the intersection with these technologies that transform the way businesses are conducted via platforms, via alternative models for lending, saving, investments. It can allow for the entrance of new market players, or it can change the business model of existing players. And in the end, we think that this can lead to more accessible and more cost-efficient financial services. And it also allows to leverage data that are available online to more specifically tailor products to the needs of the client in the end. However, again, a caveat. So while we have seen huge digital and technological progress in that sense, if we look at the latest numbers of usage, it's a mixed picture in the world and also in, again, the region, which indicates that still only a relatively small number of people have received or made a digital payment in the last 12 months, which is our proxy to estimate the use of digital payments. However, we think that actually, I think it was mentioned before, this crisis also presents an opportunity, because the digitalization of the financial sector has been proceeding now for a few years. But we think that when we look back in a couple of years, the year 2020 and the COVID pandemic probably have been an inflection point that when you look back, probably was the year where digitalization more broadly, but also specifically in the financial sector has really accelerated. The World Bank did a survey over the summer months where we basically asked financial regulators and central banks around the world how they have seen the mitigating impact of fintech technologies in light of COVID. And across the different areas we asked, they have replied that fintech has had a tremendous positive impact on pretty much all areas. Interestingly, the areas where they said the impact has been most positive was financial inclusion, where out of the, I think, 90 plus supervisors we asked, more than 70% indicated that there was a positive impact, or basically that fintech has helped to mitigate the adverse consequences of the COVID pandemic on financial inclusion. However, the development of digital financial services more broadly and fintech in particular cannot happen in a vacuum. So it needs to be embedded in the development of a more broad digital ecosystem. This digital ecosystem comprises physical infrastructure, for example. We need mobile broadband infrastructure and telecoms infrastructure as the kind of key building block. It also needs, for example, well-advanced identification systems, digital identification systems. It can also benefit, obviously, when governments are already moving towards platforms, and when there's a kind of an e-government platform that can be leveraged. And it also requires specific financial sector building blocks. One of those is the legal and regulatory framework. For example, the legal and regulatory framework for payment system needs to be agile and nimble in the sense that it allows for new technologies to become available, while at the same time, and that I think is a very important point as well, being cognizant of the risks that also come with those. It is also important that there are technologies, for example, for remote account opening. And again, the caveat that at the same time, the risks related to AML, CFT concerns need to be addressed as in the Caribbean. That has been a big issue. As I said, governments can play a role, and one thing they can also contribute is, for example, by the digitization of large volume payments. If, for example, government transfers are done electronically or digital means, that helps. Sorry, I'm having a bit of an echo here. And finally, the last component that is crucial is financial consumer protection and cybersecurity, to make sure that while we harness the benefits of digital transformation, we also manage the risks that come along with it. Now, if we look at the Eastern Caribbean, I think the countryside in terms of the foundations for the digital economy, it's a bit of a mixed picture. We have seen very kind of promising progress in terms of the digital infrastructure, in terms of, for example, broadband penetration has improved significantly over the last years. And as has been mentioned in the previous panel, there is obviously a lot of opportunity from the highly educated workforce and also from the entrepreneurial spirit. But at the same time, there are some things that still need to be addressed. For example, when we look at cybersecurity and compare that internationally, many countries still perform relatively weak. The same as when we look, we think there's some scope to improve the regulatory framework in the telecommunications sector. And obviously, coming back to the topic of this section, there is still quite some upward potential for the use of digital financial services. And this brings me to the last point I wanted to make, and the governor kindly mentioned the project that we involved in at the beginning of his remarks. So this is called a Caribbean Digital Transformation Project, where we work with 4 countries, St. Vincent, St. Lucia, Grenada, and Dominica, as well as with a set of regional institutions, with the ECCIB, with the OECS Commission, and I'm glad that my colleague will probably elaborate on this in a bit more detail in the next session. But what this project intends to do is really to build the foundations for the digital economy in the Eastern Caribbean by looking at multiple sectors. So we do not only look at financial sector or the telecom sector. The idea is really to look at a kind of multi-sectoral approach and see what are the conceived bottlenecks that we see, and how can we work together? How can we help the region to address these bottlenecks to achieve the region's vision of becoming more digital and more efficient going forward to meet the kind of economic challenges of the days. And in terms, just a very few short words on how this specifically links to the financial sector. One of the areas we are working with the CCB, and I really want to acknowledge the great cooperation under the leadership of the governor, is that we look, for example, at the payment system framework in terms of the legal framework, but also in terms of the more physical infrastructure aspects. And we also look at the development of a more broadly payment system strategy for the region. And we also try to get a few better handle of the demand side constraints to digital financial inclusion in the Caribbean. I will stop here, and I'm very happy then to take any questions that are on the project or on any other areas that the developing is involved in. And again, thank you very much for having me in this great discussion.
Thank you very much, Oliver. Did you say that only 55% of people have bank accounts? Is that what you said?
In Latin America and the Caribbean region, that is correct, yes. Right.
So, although we often think of our region as overbanked, and by some metrics that is so, the reality is that many of our people do not have access to bank accounts. And frankly spoken, it is not easy to open a bank account in this region. And that is something we're going to have to change. And we believe that digital tools can enable us to do that. And not just open an account, but also be able to maintain the account in respect of AML CFT requirements. Because as you know, ever so often our banker calls us to remind us to send in various pieces of information to update our files. There has to be a better way to do that using digital tools. I will say no more on that for now, but I want to make sure this discussion connects with real people on the ground who are dealing with real issues, one of which is access to opening and maintaining a bank account. A few years ago, many small people were forced to close their accounts or to move them to the credit unions. That's a fact. I will not go into the details on that now, but I do want to recognize that as a pain point in our financial system and in our ability to really increase and improve financial inclusion. So thank you, Oliver. We'll get back to some of these other issues as we go. Let me now invite Mr. Tobias of the OECS Commission to make his opening remarks.
of dependence on the products and services to the point that they feel that they cannot go back to living without it, and then you subscribe. So exposure, building the mindset, letting our people know what exists out there, and creating the craving to move to new and better ways of doing business. Services and platforms are primarily being driven at the national levels in our member states, but then with the OECS, we see our role as promoting this. We could speak about projects such as the eGRIP, which would have included implementation of a tax e-filing system and e-payment system, the first e-payment system in government, governments in the participating countries, Grenada, Dominica, St. Lucia, and St. Vincent and Grenadines, where persons were able to pay or are able to pay with credit card, debit cards. And the multi-purpose ID system, which was a system aimed at helping uniquely identify persons, both when appearing physically or in online, and it would also facilitate movement, allowing for freedom of movement in our region, which is something that we are mandated to establish, and so that persons could move and be identified and benefit from the services available to citizens of the region. We have now reinitiated efforts of the OECS ID, establishing an OECS ID, and this we can well appreciate is critical to digital transformation. We need to be able to properly identify persons transacting business and to be able to filter out unauthorized access and transactions from anyone or those with criminal intent. My Director General is quite passionate about this, the services and platforms, encouraging people to be innovative and to develop our own platforms and services for our region. Not just import, but start looking at, we have the capacity, we have the intelligence, start looking at how our people could take advantage of what technologies are out there and provide services, the services that we need online. And with the whole financial inclusion and digital transformation at that level, start encouraging our people to look at what's possible in that realm. I could speak briefly, and Oliver did so earlier on, about the Digital Transformation Project. The OECS Commission is leading on this front. The development objective of the project is to increase access to digital services, technologies, and skills by governments, businesses, and individuals in the participating Eastern Caribbean countries. And these would be Dominica, Grenada, St. Lucia, and St. Vincent and the Grenadines. Essentially, the project is expected to contribute to increased digital connectivity, digital public services, and the creation of technology-enabled businesses and jobs across the participating countries. Okay, it's been implemented on 5 fronts. So I spoke about the 5 countries, and the OECS is implementing at the regional level, the regional project activities, those which are cross-cutting. Okay, so just to mention quickly the components, we're speaking about digital enabling environment where we're working with ECCB in terms of the digital financial services area, ECTEL in terms of telecoms, closing the gaps in terms of digital access, access to the internet, and impacts, CARICOM impacts on the security front, where we take looking at a regional approach to cybersecurity, and creating again that confidence in whatever services we provide online and protecting our people. In closing, I'll just speak a bit about digital disruption, and I came across this actually in preparation for this panel discussion. And the question is, are we ready for digital disruption? Right? Our survival depends on how agile we and our businesses are. How quickly and well can we adapt to our new environment? And this brings to mind the Marine slogan, when faced with adversity, we improvise, adapt, and overcome. And I think the whole COVID-19 experience has forced us to think that way, has forced us to adapt. And I believe that on the bright side, if there is one, that we have become more agile as a result of this. The whole idea of digital transformation, digital inclusion, and financial inclusion may easily generate excitement in those of us involved in making it happen. However, we have the task now of transferring this excitement to our citizens, our customers, our people, to generate the hype which will cause this to take off in a way that we can maximize our opportunities by getting as close to the forefront of this movement as is possible. In closing, I'll just share with you this quote from Jim Yong Kim, who was the president of the World Bank Group from 2012 to 2019. And here he says, universal access to financial services is within reach, thanks to new technologies, transformative business models, and ambitious reforms. And at the point in time he wrote this, he was saying that as early as 2020, such instruments as e-money accounts, along with debit cards and low-cost regular bank accounts, can significantly increase financial access for those who are now excluded. And guess what? We're in 2020 now, right? Thank you, Governor.
Thank you, Mr. Tobias. So the answer is right before our very eyes. Digital transformation is not the future, it is now. That future is now. Can we have digital disruption? Well, we cannot have transformation without digital disruption. But I think a year ago when we said that, some people might have said disruption and forget the digital. But after what we've been through and are going through right now in this pandemic, I think everyone recognizes the digital tools are here, they are available, and we have been forced to use them, ready or not. Some of us were more ready than others, but the reality is that we've all had to adapt. Digital transformation cannot happen without digital disruption. And it is for us to manage that process for our benefit. And that is what digital transformation is all about. So whether it is in food security, food and nutrition security, whether it is in education, whether it is in cultural services, any number of health, obviously, any sector of the economy, digital transformation can help. It can make things faster, it can make things cheaper. And yes, of course, we do have to look out for cybersecurity, data protection issues, privacy. Those are important accompanying elements. And as you mentioned, under the digital economy, the project with the World Bank, some of these issues are addressed, and we might pick up that later if time permits. So thank you, Mr. Tobias, and I'd now like to invite our third and final panelist, Ms. Charmaine Powell, to make her opening remarks.
Thank you, Governor, and I welcome the opportunity to be part of this panel to discuss a very timely issue, financial inclusion and digital transformation. And my contribution this morning will be more in line with the digital cash project that is being piloted by the Eastern Caribbean Central Bank, where one of our main objectives behind this project is, in fact, financial inclusion. We recognize that there are a number of persons across the ECCU who either don't have bank accounts, or even those who do have bank accounts, they are not able to access all the financial services offered by the financial institutions for a variety of reasons, including the cost factor. So in developing this Dcash pilot project, one of our main objectives would have been financial inclusion. And some of the areas that we looked at in terms of the whole digital transformation and the Dcash project would have been payment system efficiency. And three key areas there are cost, speed, and security. So with the Dcash pilot project, what we speak about is faster, safer, and cheaper. So what we're offering with the Dcash project is a solution that is faster, so you can actually transfer funds or make payments much quicker than you do currently. It's safer, it's not the use of physical cash, so it's actually safer to transact in Dcash. And we have focused heavily on the security aspect of it. So we're making sure that the system and the infrastructure that underpins the Dcash is such that it is foolproof. So persons can be comfortable when they're transacting in Dcash that they have a secure method of transacting. Now, in terms of our long-term view, we are looking to reduce the use of cash by 50% by 2025. One of the questions that comes up very often is whether or not we are eliminating cash. And the answer to that is no. Cash will always be available. Cash will always be used. But we are saying in this new environment, we are seeking to reduce the use of physical cash by 50% by 2025. And with the onset of COVID-19, the need for digital methods of transacting has become even more important because we have the social distancing, we have the physical distancing, and a number of businesses in this COVID-19 environment has been moving towards a digital platform where they're encouraging online payments. They want to reduce the number of persons that are actually in store and have now started looking at facilities, online facilities where persons can make payments online, persons can actually transact online, and the Dcash will actually facilitate that. So as part of the Dcash rollout, we will be also provide an e-commerce aspect of Dcash that allows you to use your Dcash to make payments online, whether it's utility payments, whether it's bill payments, and actually purchase from merchants in the region who have online facilities using your Dcash. So that in itself will help the whole thrust in terms of the COVID-19 restrictions, the social distancing, the physical distancing, allow persons who may not have been able to do digital transactions in the past because of the fact they didn't have a debit card or a credit card, they can be now part of this whole digital sphere and they can transact digitally. Of course, the Dcash pilot as well will offer data analytics for businesses. So the information is available real time. And you have the audits really have the history. So even for the merchants that are participating in the Dcash pilot project, they will be able now to have more information at their fingertips that will help them to analyze how their business is doing and make better decisions going forward. So that's another advantage of the whole Dcash project. And then the Dcash offers new types of financial services. So even though it's an ECCB-initiated product, financial institutions can use this as an impetus to offer other financial services to their clients. I know one of the panelists on the earlier panel spoke about how they can shift their resources into new areas. So they can now use their resources, their staffing, to offer advice to customers. So that is one way in which we can see the advantage of the whole thrust to digital transformation, where we're offering these new products, but it does not mean that we're trying to replace staff or replace persons, but we're now shifting the way we think, shifting the way we do business, and offer opportunities whereby persons can now get more information and make more informed financial decisions. So this will be a way to improve financial literacy as well across the region. And so persons can now be a part of this whole digital transformation thrust. And then, because as it is, we are moving in globally towards digital transformation, and we do not want any of our citizens left behind. So we're hoping through this initiative from the ECCB that we'll be able to bring all our citizens along, and they can be all part of this digital transformation. Thanks, Governor.
Thank you, Charmaine. Very succinct, but very timely, given where we are. And I will just simply add, and we're going to go to the questions in a minute, that 80% of central banks around the world are now looking at digital currency. 80%, 80. 2 years ago, when we started this journey, the number was very, very small. And we started it because we felt this was a transformational need, a project for our region, and for poor people, meaning people, man and woman in the street, as we would say, who need access to financial services. I would also make this point, that when we think about digital transformation in our region, we firmly believe that the digitization of our currency is a very important step in the digitization of our society and our economy. And so this project is very timely. Now, of course, when we started, we were not thinking pandemic. We were thinking financial inclusion. We were thinking efficiency. We were thinking reducing use of cash. We are thinking improving resilience, competitiveness. But yes, guess what? Having experienced this pandemic, we are even more fortified in our view that this is a very timely and important transformational project for our region. And I want to thank you, Charmaine, as the leader of our FinTech Working Group, for your very hard work on this project, which we will launch soon. And I know we are all looking forward to that. So with those words, I thank the panelists for their remarks, and let us immediately go to the questions. So we're going to, let's hear from you right away. So the first question on screen, so we're going to get to the Mentimeter shortly, but I meant the questions from the panelists or from the listeners. All right, so Mentimeter, hold on. We'll get to you shortly, probably at the top of the hour or a little sooner, depending on how many questions we have in the chat or the Q&A box so far. But we want to get our listeners, viewers involved right away. So here's the first question. Oliver, I think that's for you. Were the credit unions involved in this survey? So the survey was Latin America and the Caribbean. So first of all, we have to disaggregate Latin America from the Caribbean. That's a very important thing. And secondly, the question is, who was surveyed? Was it banks, or I suspect, or were credit unions included? So Oliver, can you give a response to that first question?
If you're referring to the survey related to the COVID impact, that was actually a survey about financial sector regulators. So I think it was usually the central banks and the regulating bodies in charge of regulating the overall financial system. So I don't think that this survey has particularly be extended to the regulators in charge of the credit union movement in the countries. But we obviously acknowledge that credit unions, in particular the Caribbean, play an important role, and that the need for digitalization doesn't end with banks. In particular, also the business model of credit unions, the large amount of small accounts in many cases might actually even mean that the potential benefits of moving towards the digital technologies are at least as high as for banks. Also, in terms of risk management instruments, that there are quite a few innovative financial solutions using new technologies that can be beneficial for the credit unions. At the same time, we acknowledge that obviously moving to digital involves substantial fixed costs in the beginning, which might be difficult for smaller credit unions to stem. So I think there's also a need at the aggregate level and at the credit union movement to think on eventually coordinating approaches of how to actually foster digitalization in the credit union sector as well.
Thank you, Oliver, for that clarification. Let's go to our second question in the Q&A box. Charmaine, I'll ask you to address this one. The ECCB has taken the initiative to pilot and likely implement a digital currency and payment system. The associated infrastructure and system would likely be owned and dominated by the ECCB. To facilitate the much spoken about financial inclusion, would the ECCB in the future be willing to provide details on the digital infrastructure and system, an open source concept, and focus on regulation and facilitate further development of business opportunities?
Thank you, Governor. So yes, you're correct in terms of the infrastructure being predominantly owned and operated by the ECCB for the purposes of the pilot. However, the intention is, even as part of this pilot, is to provide an opportunity for persons to actually test API functionality. And even with the e-commerce that I spoke about earlier, this will be part of it. So we will be providing APIs for businesses, merchants, to be able to plug into our system to actually do their e-commerce. And then we have other operators who will be able to test that functionality so they can actually provide stuff such as wallets in the future once we reach in the post-pilot era. So yes, we will be able to roll it out to the wider community so that they can actually offer other financial products on the back of the Dcash. Thanks, Governor.
All right, thank you, Charmaine. And this is a question that keeps coming up, and I'm glad it was asked again. Now, keep in mind what the ECCB is doing here. We're providing the infrastructure, the heavy lifting, that investment, so that private operators, businesses in our region will not need to undertake that investment. They can then do their the applications using the API, the application program interface, to be able to do that. And a motivation for us, remember, is to keep those costs down for the region, to keep those costs down, because we make the point all the time that the cost of payments is too high, and frankly, the payments are too slow. So we want to keep the payments down. If we did not make this investment, somebody who had to make that investment would obviously have to charge to recover. So we make that investment for the people of our region. We are your central bank. We work for you. Private operators in our region can then come on top of that and offer services. So having put down the road, as it were, many vehicles can drive. And we expect opportunities for the private sector. All right? We will get there, and soon, and soon. And in fact, we will be reaching out very shortly, Charmaine could have mentioned, to engage you on the e-commerce opportunity. So that is something that you will hear from us very shortly, because we're designing that to cater for the private sector's involvement. Okay, let's go to the next question in the Q&A box. It is this. At a recent Caribbean Association of Banks conference in the Bahamas, we learned that the government in that country had given access to their citizens' database for financial institutions to facilitate due diligence during the account opening process. Given that most governments have implemented the World Bank's e-government initiative, this is opportune, this time is now opportune for such an initiative in our region. Is this a project that the ECCB will wish to lead, given their success with championing other multi-country projects with their member banks? All right, so we would have to look at that. I cannot speak to that with any specifics. That is something we can look into. If Chris, who is our Director of Bank Supervision, wishes to opine on it, he can. But I think our position would be we would look at the Bahamas. We share information all the time. We speak to each other. We will look at what they're offering and see if it is something that can be of applicability to our region. And our ECC, and I will tell you this, our disposition is to share. We get a lot of requests from central banks in the region and elsewhere to share our experiences so far. We do that freely. The other central banks, having spoken to us, are now embarking on digital currency approaches. So we have no difficulty reaching out to a central bank and learning from them if there's something that can benefit our region. So we'll take a note and we will look into that particular idea which has been raised by this participant. Thank you. Let's go to the next question, please. And I see a question that says, will there be a system of incentives or disincentives to drive the behavior of our people and businesses towards the use of the proposed digital currency? Charmaine.
Thank you, Governor. So yes, I can say definitively that we have some incentives that we will roll out to the public shortly in terms of encouraging both end users and businesses in using the digital currency. We recognize that with any new product, there would have to be some incentives for persons to be encouraged to use it. So we do have some incentives that we have thought about, that we have actually discussed with the private sector in terms of what they think would work for them, given their experience in rolling out new products, their experience in the business environment. And we've also had discussions with some of our end users as to what would encourage them to use the Dcash. Now, we recognize in this particular environment where economic activity has slowed somewhat because of the COVID-19 pandemic, that what we need is for persons to actually spend. So a lot of our incentives are centered around encouraging persons to spend, putting back money in people's pockets so that the Dcash can actually recirculate. So over the next month or so, we'll be actually circulating the incentive packages that persons can start thinking about how they would immerse themselves into the use of the Dcash, both merchants and end users.
Okay. Charmaine, we're going to stay with you at the moment. There seems to be clearly significant interest in our Dcash project. I think you may have answered this, but you could offer a comment. What's the future view of Dcash as it relates to other payment applications in the region? Is it a goal to have a single app? How can an existing payment apps benefit from the ECCB's CBDC's central bank digital currency project?
So currently, for the purpose of the pilot, it's a standalone because we have to test the app, to test the whole Dcash system to make sure it is viable, make sure it works. Now, at the end of the pilot, the intention is that we will have discussions, we'll have a debriefing, of course, and we will see how institutions can, in fact, use the Dcash and offer additional products. So, of course, we do expect that post-pilot, there will be some integration with other payment system, other payment products that are offered by the private sector, so that it may end up being one app. We're not sure at this point in time, but the opportunities will be made available for that.
All right, thank you. And what I would say is, in the same way we now getting questions, if you have ideas or suggestions, now is a good time to send them to us. We are going to be convening to discuss some of these issues, and as Sharman indicated, post-pilot, obviously we'll make some final decisions. But if you have some suggestions, you can help shape it. Now is the time to put those ideas on the table. So be reminded of that. And let us hear from you. info@eccbcentralbank.org gets you to anybody in the bank who needs to hear from anyone in the public. info@eccb-centralbank.org. Now, there's a question here. Oliver, I'd ask you to comment if you wish. What is the financial inclusion rate in our region, ECCU, as a whole, and specific countries? Well, Oliver, if you wish to comment, please do.
Yes. As I mentioned before, the way we usually measure the most basic form of financial inclusion is account ownership. So it's basically the share of the adult population that has a transaction account. And that is the number for the Latin America region that I stated before. When it comes to the Caribbean, unfortunately, I can't give you a definite answer because due to the small size of the countries, in many of the traditional World Bank service and data sets, the individual countries are not recorded. But that is also one of the reasons why within the Digital Caribbean Transformation Project that I described before, we devoted a specific subcomponent to doing some of these services, that we basically look at demand side constraints to financial access and also get a more comprehensive picture on the situation of access to financial services in the Caribbean. And also in order to be able, using the same methodology that is used across the world and to put the Caribbean in comparison to other countries that share similar characteristics, be it in terms of size, be it in terms of GDP per capita, being in terms of reliance on tourism, for example. So as of now, we are not able to do this comparison, which we acknowledge is a big disadvantage. And it is something that we are working hard within the project to address by really collecting the data in the Caribbean. So I'm sorry that I can't give you an answer about this today, but it is something we are working on, and hopefully within the life of the project and within the near future, we have much deeper information so that we can really answer this question.
Right, Oliver, thank you. I think Charmy wants to comment, please.
If I may, Governor, as well, we're hoping that through the Dcash pilot project, we'll be able to get some insight into the whole financial inclusion, the rate, because we will be conducting surveys throughout the pilot project. And so therefore, that will give us a sense as to what the rate of financial inclusion is in the ECCU.
Right, thanks for that. In addition to which, our statistics department is also now considering a financial inclusion survey generalized to assist. So a couple efforts should get us a more specific answer to that question. We have anecdotes, and we can tell you even from our currency patterns now, which countries are more cash intensive than others. I won't go into that now, but we have data on that. But clearly, payment channels have changed. So whereas it was predominantly cash, still is about 80% of all transactions are cash or checks. So that's still a very high number. But we've seen in recent years a migration to digital channels, and we're going to be monitoring how that moves, and also who has access or not. I mentioned at the top that there were people who were forced to close their accounts, their bank accounts. Some of these people went to credit unions. So the question that the person asked about whether the credit unions were included is important, because if you're going to measure financial inclusion properly, you do have to also see what is going on with credit unions, which are a very important player in our financial system. So we should have some specifics on that, hopefully next year, God willing. Next question, who owns the data captured in the Dcash ecosystem?
The data captured is ultimately owned by the ECCB as the owner of the infrastructure. However, we've made it very clear throughout our engagements for this pilot that the same arrangement that currently exists with your financial institution will exist throughout the pilot. So, for example, currently, persons who have accounts at financial institutions, their data is housed by the financial institution and it can only be divulged if it is legally required to do so. The similar arrangement will continue for the purposes of the Dcash pilot. So, persons who have wallets with the financial institutions, the information is held by the financial institution and can only be released if it is legally required to do so. But as the ultimate owner of the system, the ECCB owns the data.
I think you just answered this question. Will there be rules for granting access? And the answer is yes, but go ahead.
Yes, there will be rules. So as I mentioned, if it's legally required to do so, it will be accessible. However, whatever currently exists, because we have not relaxed any legislation or regulations for the purpose of the pilot. Whatever currently exists will remain. So whatever the legal requirements are, those are what would apply for purposes of Dcash.
The same rules apply. We have to protect people's data. The same rules apply. Thank you. Do we have any other questions? We've been going at a fast clip, trying to pull in as much as we have. I want to put the Mentimeter on standby. So if we have other questions, we will take them. I am not seeing any at the moment. So let us move to the Mentimeter, please. So we're going to pause. Thank you for your questions so far. Hope we've been able to help you with those. I now want us to take the audience poll. So we're going to pivot to our Mentimeter, that fun segment, and we're going to start. So it's www.menti.com, www.menti.com. And the code today is 3302699. Let me repeat that, www.menti.com. And the code is 3302699. That's the code. Once you put in the link, www.menti.com, you're going to be asked for a code. You put in 3302699. The questions will begin to appear. Question number 1. Is the policy environment appropriate to improve financial inclusion through digital transformation? Is the current policy environment appropriate to improve financial inclusion through digital transformation? And there are 3 options: appropriate, somewhat appropriate, not appropriate. So please, you can begin to express your views on question 1. Yes, I see people have jumped in. Here's a question: is the policy environment appropriate to improve financial inclusion through digital transformation? And the options are 1, appropriate, 2, somewhat appropriate, 3, not appropriate. And we'll give you another minute or so to weigh in on this one. Is our current policy environment appropriate to improve financial inclusion through digital transformation? Appropriate, somewhat appropriate, not appropriate. Final 30 seconds. Final 30 seconds. www.menti.com, and the code is 3302699. I want to repeat the code, 3302699. And if you got that, you should be in, and the question number 1 is on. Final 10 seconds, final 10 seconds, final 10 seconds. There we go. Okay, so we're going to close this poll, and what we see here is that 60% of respondents have said somewhat appropriate, which means we have something. We're not starting from scratch, but we have work to do. Well, We got in a few ballots. We will count them as valid. And therefore, 58% have now said that we are somewhat appropriate policy environment. 26% of you said not appropriate. 15% said appropriate. So clearly, only 15% believe we have the right policy environment for digital transformation. That's a lot of work to be done, and I'm glad to know that the Caribbean Digital Transformation Program, supported by the World Bank, led by the OECS with partners like the ECCB, ECTEL, and Impacts, CARICOM Impacts, will help with that. Thank you for your response to question 1. Question number 2, please. Question number 2. www.menti.com, the code is 3302699. Here's the second question. What should be the first order of business? Should it be to increase financial inclusion through transformation? Let me take that again. What should be the first order of business to increase financial inclusion through digital transformation? What should be the first order of business to increase financial inclusion through digital transformation? And you have 4 options here. Lower transaction costs, unique digital identifiers, financial literacy, connectivity. What should be the first order of business to increase financial inclusion through digital transformation? Is it lowering transaction costs, establishing unique digital identifiers, financial literacy, or connectivity? Those are your 4 options for question 2. In case you're just joining us, we are in fact part of our second conference for financial institutions. We are now on our second panel, Increasing Financial Inclusion Through Digital Transformation. We are in, I think, the final 10 minutes, and we are looking at Mentimeter or poll, audience poll, question number 2. And here is the final time I will read this, 10 seconds left. What should be the first order of business to increase financial inclusion through digital transformation? Is it lower transaction costs, unique digital identifiers, financial literacy, or connectivity? And so we will close that question, and here is the response. The readout, 58% of you, 59% of you said financial literacy. 59% of you said financial literacy. 30% said connectivity. 8% said lower transaction costs. 3% said unique digital identifiers. Unique digital identifiers are mechanisms really to protect your privacy and your data. So it's assigned to you, it's a number, it's a code assigned to you, which ensures that nobody steals your data, nobody can steal your identity, and to help with cybersecurity. Okay, so that's it. 59% said financial literacy, 30% said connectivity, 8% said lower transaction costs, 3% said unique digital identifiers or IDs. Thank you very much for that. Let's move to our third question. Question number 3. What is the greatest benefit of financial inclusion that you think digital transformation would bring to the ECCU? What is the greatest benefit of financial inclusion that you think digital transformation will bring to the ECCU? 1, increased speed and lower transaction costs. 2, improve access to credit and financial services. And 3, economies of scope or scale through interoperability of systems leading to more targeted financial products. what's the greatest benefit of financial inclusion through digital transformation? Is it increasing speeds and lowering transaction costs? Is it improved access to credit and financial services? Or is it economies of scale through interoperability? For example, we were talking about the digital currency a little earlier, or Dcash, and the need to ensure that persons can have e-commerce. They can connect using APIs, application program interface, to allow them to be able to transact on Dcash or in Dcash. And to do that, we have to make sure the systems are interoperable. That's a very important consideration for us. And for fintech in general, interoperability, that's very, very important. We want no monopoly situations where some people are locked out, because that would be financial exclusion, not inclusion. So 30 seconds on this third question. What is the greatest benefit of financial inclusion that you think digital transformation would bring to the ECCU? Is it increased speed and lower transaction cost, or improve access to credit and financial services, or economies of scope through interoperability of systems leading to more targeted financial products? Final 10 seconds. The poll is now closed, and we now go to the final count. And again, real-time answers, real-time results. So what we have here is a very close race. 41% of you said increased speed and lower transaction costs. That is what you see as the single biggest benefit of financial inclusion: lowering transaction costs and increasing speed. 38% said improve access to credit and financial services. And as you know, when we speak about financial inclusion, we're speaking about not just payments, but also access to credit. And 21% of you said economies of scale through interoperability, leading to more targeted financial products. So that's a neck-and-neck race, but I wouldn't say it's too close to call. I think we can call it 41% said increased speed and lower transaction costs. Of course, I'm having a little fun. We should. I did say at the beginning we should have fun. So that's our third and final question. Thank you very much, everyone, for your participation. And welcome back to our panel. Let's go back to the Q&A box, see if we have any questions. So I had a few questions, but we could ignore those. The panel, we want to hear from the audience, so we will take your questions. And somebody said, thank you for voting on our live poll. I think that might have been us. Thank you. Thank you. I know you appreciate the live poll. We do as well. And it helps us in terms of our research. Do we have any more? If we don't, then I'd like to go back to our panelists, and I'll basically give them each 2 minutes to pick up any points, any final comments that you want. So you can cover anything that you would like. In closing, if you want to say a little bit more about the project, feel free to do that. But we have 5 minutes to wrap. So let me start with Mr. Tobias. Kevin, what would you like to say?
Yes. Well, I would just like to say that, I mean, this is very important. And even with the discussion, the whole introduction of the digital currency, the Dcash, and the poll where we spoke about what policies would be appropriate to facilitate financial inclusion. And it takes me to the whole idea of policy formation, policy implementation to support this. From the OECS standpoint, we put a lot of value on education, promoting financial literacy. How do we encourage our citizens to take advantage of what is there? How do we get poverty or stamp out poverty? And I'm sure we can all appreciate that poverty, financial literacy can drive, could be our way out of poverty. From the OECS standpoint, we have been putting in place policies. I spoke about the early learning and what education is doing in terms of strategies, curricular policies to support our people to build a knowledge capacity and to get us to be at the forefront in the world. Our human resources is critical, is our most important asset, I would say. We have also done some work on legislation to support the whole financial inclusion, the legislation covering e-transactions, covering privacy, protection, electronic crimes. And that was done under EGRIP, and we continue to push to ensure that member states are putting these in place. So we have been doing our part, and we look forward to financial inclusion, that our citizens, especially those less educated, those less exposed, or those who have been excluded thus far, can benefit and learn how to benefit from all what we're doing here today. Thank you.
Thank you very much.
Thank you very much.
Appreciate the leadership of the OECS on this very important transformation agenda. So thank you for that. Let us then go to Mr. Massetti. Oliver, would you come in, please?
Thank you. Let me first of all thank you again for having me on this session. It was extremely interesting for me to be here and to hear to all the panelists. I would also want to congratulate the ECCB and also the OECS Commission for the constant push to innovate and really try to find creative solutions to improve the economic life in the Eastern Caribbean. And we at the World Bank, we stand ready to support these efforts wherever we can. I mean, we have this project. And what to me was particularly interesting was the live poll where you showed that basically, I think it was 60% said that the policy environment is somewhat conducive for digital transformation and financial inclusion. And I think the ultimate goal of the project is that if you were to run this survey in a couple of years from now, that not only 14% say it is conducive, so that we get this number up. And I think the goal that we at the World Bank have, and where we are looking forward to work with the different institutions and the member countries, is to really increase this number and to make sure that we can support the policy environment to really make an impact in financial inclusion in the Eastern Caribbean. Just maybe one last aspect that I would like to highlight. I think it was briefly touched upon in the first panel, and I know that our country director was in a similar discussion last week and also mentioned this. What we think is really crucial for the Eastern Caribbean, for the endeavor towards digital fund transformation, is the regional dimension. It is that there is coordination across the member countries. It is the leadership by the regional institutions. We don't think that there will be, great progress towards the digital transformation if the countries go alone. It is important that there is a coordinated approach that I think the governor also referred to, interoperability. It is important that, for example, licensing requirements are harmonized. So we think that the way the Eastern Caribbean has the highest potential to achieve the goals towards digital is really going through a regional approach. And that is also why for the project, we have decided to really support the regional project rather than go for the countries. And I think that is one point I just wanted to emphasize once more, that we really support the regional dimension, as we think that is the most important, one of the most important aspects that will determine success of the project and of the broader digitalization agenda. Thank you very much.
Thank you, Oliver.
Thank you, Oliver. Thank you, Oliver.
Thank you for all of your hard work on that particular project, more of which we will hear about in the months ahead. And now let me invite Ms. Powell to make her closing remarks.
Thank you, Governor. So my closing remarks will be directly related to the Dcash pilot project. And to say that as we have gone through the process of rolling out this project and doing the development work, we have seen, and with the impact of COVID-19, we've seen the importance of this initiative come more to light, which is what influenced our decision to extend the pilots to all 8 of our countries. Our initial intention was to have it roll out in 4 countries, namely Antigua and Barbuda, Grenada, St. Lucia, and St. Kitts and Nevis. However, realizing the importance of this initiative and the importance to the region as a whole, we have made a decision to roll out in all 8 countries, and therefore the pilot itself will be extended beyond the original 6-month period. So over the next few months, we will see the Dcash actually roll out in the public realm. And what we're trying to do at this point in time is to ensure that when we actually launch the Dcash pilot, it is a product that can really benefit the people of the region, that can really push the whole digital transformation that we're trying to achieve. So we want to make sure all aspects of it, which is why our focus currently will be on the e-commerce aspect of it, and we'll be reaching out to the public and private sector to make sure that whatever we end up producing to the public is actually a product that can be used and that can help us to meet our objectives of financial inclusion. So for the next few months, we'll be seeing a lot more about the Dcash as we get ready to actually bring it to the public and see the benefits that we're hoping to achieve through this very important initiative. Thanks, Governor.
Thank you very much, Charmaine. And I would just like to add, by way of my own closing, that as a result of coming together, the regulators in the ECCU, to deal with fintech, financial technology, and all of these developments, we needed a coordinated approach. So to Oliver's question about the regionalization and regional approaches, we fully agree, and that's why we recently were able to conclude on a virtual assets bill, or digital assets bill. That bill was approved by our Monetary Council last month, and we've now sent it to our member countries and encouraged them to enact as early as possible. We hope some of them will take it before the end of this year. But that is intended to help us. So that is one specific example. I will give you another. Under the Caribbean Digital Transformation Program, we will be addressing data protection across the ECCU. And just like the Europeans have this general data protection regulation, which is their standard, we will need to have a standard of our own, and we'll be working on that. We'll also be addressing the issue of cybersecurity, which is very important in this period and as we go forward with digital transformation. Those are some areas at the regional level. And of course, you've heard about digital currency or Dcash. One of the last things I'll say is the payment systems needs to be modernized. And remember that pillar I mentioned, the 4 pillars of the Program of Action for Recovery, Resilience, and Transformation? Well, the 4th pillar is payments modernization and digital transformation. And in that regard, we will be producing a new payments services and payment system and services bill. The current bill is 2008, 12 years old. It's not fit for purpose. It does not recognize many of the developments in the digital fintech space. And so we will be bringing uniform legislation for a payment system in 2021. Just some examples of regional cooperation to facilitate digital transformation. With that, I conclude where I started this morning. We cannot change our history. We cannot change our geography. But we can certainly change our development trajectory through digitization. Let's seize the moment. Let's make it happen now. Thank you very much. It's been a pleasure. My thanks to all of our panelists and for you, the audience, who participated with your questions and for your comments. And now I'd like to hand it back to our Master of Ceremonies, Mr. Shernell Thompson. Thank you very much, everyone.
And thank you, Governor Antoine, for leading such an interesting panel this morning. I'd like to take the opportunity to just extend a few key words of thanks. We wish to extend special thanks to our panelists who joined us from across the region and the United States and provided us with their insight and experience. I wish to also thank our moderators, Mr. Christopher Luard, Director of the Bank Supervision Department, and you, Governor of the Eastern Caribbean Central Bank. We also wish to thank you, our viewers, valued citizens, civil servants, businessmen and women, people who all serve, for joining us today via Zoom, Facebook, YouTube, and for sharing your perspective on the issues discussed here this morning. We finally wish to thank the team here at the ECCB, Ms. Zana Bernard, Research Department, and Mr. Alistair Hodge, also of the Research Department, the CRD team, that is our Corporate Relations Department team, headed by Ms. Shermalyn Kirby, supported by Ms. Aklim Biles, Mrs. Karina Phillips Somersall, Mr. Marlon Bristol, and finally our MISD team, supported by Mr. Shafari, Janil, and Iodel, and other members of staff, both seen and unseen, who worked to make this conference a reality. If you missed any part of this conference, you may visit our Facebook and YouTube pages for a recording of this conference. You may also visit our website for more information on the ECCB and our initiatives which benefit you, the people of the ECCU. A pleasant day to all.
To introduce Dcash, the official digital version of the EC dollar. Dcash is the safer, faster, cheaper way to send and receive payments within the Eastern Caribbean Currency Union, all using your smart device. For more information, visit the ECCB's website. Dcash, coming soon.